Let's see if this works. Boom. Let's see if anybody's in here. Oh yeah, someone's in here. Sweet. What up? What up, brothers? What up, Emerson? Let's turn that shit off. Let's get it rolling. How's everybody doing? Welcome back. Oh yeah, I got some work to do here for sure. So some of your stuff is cut off here. Let's see if I can. Yeah, I can see what you're talking about now. Alright. God, I don't know if I'm in the right place over here. Oh, maybe I should have brought something up. I'll bring this up first. Oh, yeah. Oh, we'll leave that up right there. We'll start with this. How's everybody doing? Hells yes. It's gonna be good. I got that. You guys see that? You guys see that beautiful camera over there? See that? See that thing over there? It's pretty nice. I know it's been weeks. Dude, this has been a nothing but a nightmare, without a doubt. So I'll leave some of these streams up here for you. How's everybody doing out there? Everybody's coming in right now. Good to see everybody. Yeah, we get a lot of shit coming through here. It's gonna be badass. You guys are gonna be stoked. I'm gonna put a live stream inside of the Discord with the flow algo in there. How's everybody doing? What just happened with the VIX? Yeah, we should be selling off here, just so you know. We'll talk about that here in just a minute. We should be right around here, 28.74, pretty decent place to sell off. 4,300, pretty decent place to sell off. And we'll talk about it. This is dispersion, right? This is what you call dispersion. We have accumulation, and then we've got the rise in price, and then we are going to distribute it. Even if we're continuing to go up, we're going to distribute it. And then we'll make our next leg up if we continue to go up. If not, and we start to roll the market over, then we'll, all right, so I'll turn that off. And let me get to the live stream here. It's kind of the same thing, right? But I'm going to switch this, okay? I want to talk to you guys about something, okay? Everything looks more clear? Oh, yeah, this should be dopeness now. Like pure dopeness. There shouldn't be any more problems at all. I shouldn't ever have any... If you guys are lagging at all right now, you guys can speed up your stream until you catch up, and there should only be a delay of seconds. Just press fast forward. My voice will get weird for about 15 seconds, and then the voice will smooth right out for you, and you'll be just a few moments behind me. Okay, it's almost like a real, true live stream. So we're catching a little bit of a bit here. We're going to talk about something real quick. I don't know what positions you're in out there, but this is probably important for us to go through at this point today. This is from this morning. It was another volatile overnight session with futures currently trading at 42.40. That was this morning, right? We looked for elevated volatility to continue as long as the S&P is under the 4,300 strike. So I'm going to key into this right here. As long as you're under 4,300, we got volatility, baby. Resistance lines up here at 4,249. Right, and we remember we opened this morning right here, and we traded above it, and we melted up all day long, and we're getting close to that 4,300. Okay, support actually still lies down below at 4,200, and believe it or not, true support's at 4,076. So we haven't even bypassed 4,300 yet, and until we get past 4,300, find some support. We can't break past volatility. Okay, so if you want to be bullish, it's over 4,300. As we approach 4,300, you take your winnings, right? You take your money off the table and you wait for the banks again to trade us higher, right? And this is also another spot that you put some protection on into the market. If you're a bear, this is where you want to lean into the market to trade us down to 4,000, right? 76. And we're going to look at something here in just a minute. That's important for you bulls out there that are saying, oh, fuck no, we're going higher here. I got something to show all of you guys out there I want to talk to you guys about. Some of you probably know about this, but it came up yesterday. We flashed a crash yesterday, and the market's reaction this morning is not unexpected. And even in the crash being flashed, it's kind of mimics what happens in these movements. Okay, right where we are right now, we should see high volatility because of the market crash flashing. Right, we should have swings that are violent up because we're gonna most likely, not most likely, but a high probability of some serious downward moves. I know this sounds uber bearish and the day's been super happy and everybody's all stoked out there, but I'm going to show you a couple things, okay, I want you guys to key into. Now, like yesterday, the key range is framed by the large interest at 4,000 and 4,300, right? They want to burn all these puts down here at 4,000. We know that as well, right? And we look for volatility to reduce. Well, in between that range, we expect price action to remain fluid. If markets get above 4,300, look for volatility to reduce, right? That would mean that you're going to then pick up this trade above 4,300 if you're a bull. But until then, you're going to take the money off the table, okay? We also see 4,400 as major resistance, right, into 316. So if we get over 4,300, what do? We find some support. We try to start to consolidate. You're going to then take a long up to 4,400, okay, if this happens. Okay, but at this point, where we are in the market, we're now down to 427.56. We know that we're going to encounter some resistance here at this right around this area, okay, as we start to hit this 4,300 mark. And we're going to talk about something that's not shown here in a moment, okay? In regards to that lower bound concept we discussed, the length, that remains in play, right? Less than equal to 4,100. This is ultimately due to the large open interest at 4,000. As you can see in the gamma chart below, under 4,100, the profile flattens out. This, along with our view that dealers are long tail risk, suggests dealer hedging requirements may be reduced less or equal to 4,100. Through our lens, this implies support. Their point to you, or their point that they're making to you, is that we should find some kind of support somewhere around 4,100 or 407, I think 4 or 9 or whatever down below. Okay, these numbers change every day of the fucking week, depending on how we're trading. The other key thing to key into was yesterday's close, and yesterday's close, no matter where we traded to today, right, was a signal that we're going to probably trade even lower. And we're going to talk about what's been setting up. We've talked in the past about when you start putting bad weeks together, right, it works itself into a bad month. We start to add bad months together, it starts to add to a bad quarter. You start adding bad quarters together, right, and the recovery takes longer and longer over time. So if you're putting together bad months, you're putting together bad quarters, right, it's not that you can't reverse the trend, it's that how long does it take, right? You're not going to go from having 2-3 bad quarters and then all of a sudden you're at all-time highs that following quarter. You're going to have to work your way back from all that damage that's been done to the market. And so we're going to talk about that, right, as we stack this stuff up over time. What does it mean? And we have an indicator, a simple way for you to look, a simple indicator for you to look at that the damage has been done inside of this market, okay? Now, we've got, we'll go to the calendar later. I'm going to go directly over. We're on SPX right now, okay? And I want to show you guys something because of the damage that's been done in the market. Hold on here. We'll do them separate. We'll just do 2 of them. We'll do 2. Can I do 2 of them here? Yeah, I can do 2 of them here. We're gonna take a look at this right here, okay? And we're gonna change this up here. Some of you probably already know, right, what I'm gonna show you here. Some of you don't. Some of you do. But just bear with me here, okay? So we're gonna change that to 50. We're gonna change the 50 to. Matter of fact, we're gonna make that a nice red color. It's important that it's a red color. Make it nice and fat so we can all see it. Right? Boom. And then we're gonna change this one right here. What do you guys think I'm gonna change this one to? I bet some of you know what I'm gonna change this one to, right? I'm gonna change this one to the 200, right? And I'm gonna change the color. We're gonna make this one so we can actually make this look really nice here, okay? And we're gonna go okay. And we're gonna make sure this one's fatter so that you can see. Yeah, it's that the one's fatter, right? That's good. Okay, we're good here. We're good. We'll make this yellow one smaller so you can visualize it. what I'm talking about here in a better way. Okay, maybe even like this, okay? And visualize it like that. Now, let me make it a little bit thicker. Okay, that's good enough. Okay, what I want to show you guys is this, okay? I want to show you guys this confluence that's taking place here, okay? And I want you to see, right, when this 50, this is the 50 in red, okay? I want you to see what happens when it starts to cross over here. I want you to see how low we are right here. A couple key points I want you to look at. I want you to see how low we still actually are today, right? I want you to see how far we have to go for this confluence not to happen. And I also want you to realize that as this confluence starts to take place, you're going to see high volatility. And you're seeing it in today's market already. And I want to show you in the past, we're on a daily chart here, right? On a simple moving average. And I want to show you what happens. And I want you to see right here, okay, this is March 2020. See this high volatility in here? See this move right here? 28.61, right? We moved all the way up to 31.43, right? That's a huge move. Huge, right? And this is just before a cross of the 50 over the 200, okay? So look at this and then look at this over here. And I want to show you that because we could be recovering today. We could recover today, tomorrow. We could recover and blast off to all-time, not all-time highs. We could blast off all the way into the FOMC, right? And literally sell this market down and it'll be a bloodbath. A straight, utter bloodbath. So be aware of this crossover taking place, okay? Do you guys know what these are called? I think some of you know what they're called, but I think not all of you do. We'll leave that for the end. I want to show it to you again, okay? I want to show it to you again in the past. Boom, there's one, right? Here's another one. Boom, right? This is a killer for bulls. Killer, brutal move back here, okay? Look at how we're not that close here, right? But here's one instance, right, where we got close, but not too close. But we had a huge move down in here, right? So we want to see this 50 raise back up, right? This is an instance where it didn't work. But I want you to want to show you here when you get that close, right? I want to show you when you get that close. This isn't that close, but when you're down here and it gets close, if it crosses over, bam, right? And then talk about trying to recover here again, and bam, you get knocked back down. We're going. This is what? This is May, right? Of 2015. So I'm showing you now how rare this happens, right? We're now back 7 years in the market. And here's another one. Bam, bam, right? I'm going back now a decade, right? It's so rare to see this take place in the market that we get that close. And NASDAQ's already crossed over. That's why you see such a huge reaction today in NASDAQ, right? I'll show you NASDAQ. I'll show you NQ. I'm going to show you IWM, okay? I want you to see that that's already taken place. I think it's already taken place. Yeah, we've already crossed over here. Look at this violent move down in NASDAQ, right? This relentless selling down in here, okay? Let's look at IWM and see what's going on with IWM and see how close that one is, right? Boom, close down over here, right? Boom, right? So you've already seen this take place. We already know what the chances are with this cross taking place of another violent move down. You already got this violent move here. So my only concern is that we're looking at SPY, you're looking at ES, and you're saying everything's going to be fine. We're fine, Cap. It's the market, or the market's going to recover. And everything's going to be great. But I'm going to show it to you here. This is ES here. This is how close we actually are. I want you to take note of this here, right? If we get this cross in here at any point in this next week or two, right? This is gonna get nasty. There ain't no way about it. So keep yourself focused, even on this recovery play. You could literally recover here. I mean, look at this recovery you could make. Probably make this recovery to somewhere around 4,400. Is that what they were saying? Right there. Make this recovery, right? Not break the previous high. You see the previous high over here? We can go closer. Bring this over here. If you don't break this previous high, right? Break free of this previous high. That's 4,420 or so. Probably call it 4,400. 4,400 hand grenades and horseshoes. If you don't break this previous high, you know what's going to happen right here? We're going to sell this market bad, like bloodbath bad. Bloodbath bad, okay? This is the general market health, right? You've already seen weakness in NQ. You've already seen weakness in IWM. The market internals still aren't there. There are other aspects to this market that haven't had a bloodbath yet. We know that, right? We know that there's more room to be made going down. Just keep this on your plate, that all this bullishness that we get right here, right? We haven't seen this, but dude, a handful of times in 10, 20 years. This is not that often. Very dangerous in the market. So when I come on Twitter and I'd say to you, hey, we're flashing a crash right now in the market, right? There's other reasons we're flashing a crash. But this is an easy indicator for you to be looking at. This is a simple way. This is something that you just don't see. We haven't seen this. The last time was 2 years ago. And we just look back at a couple decades, and even those times, it was very rare that we even got this close. It's not like we're sitting here going, hey, yeah, Cap, we're over here, right? And we're kind of curling it up over here. It's not like you're saying, oh, yeah, Cap, we're over there. We're literally right here. We're here. There's no other. You can't get any closer. You start coming down right here, and you make that cross. There'll be no. It could happen in the overnight, and you're literally straight down to the depths of hell. Okay, just be conscious of this as we move forward. I'm gonna turn that one off. We don't need that one right now. And matter of fact, it's weird because I don't have my this chart. I had logged in. This chart doesn't match the spot gamma numbers at all. But what we'll do is we'll take a quick look at the chart here for you as you trade forward. And there's some positives here, right? Every time we trade off, we're coming up. Every time we trade off, we're coming up. This is a melt up scenario, right? Trade off, come up. Trade off, come up. Trade down, starting to come up. Hopefully, it can break this plane. Or even if we trade this down here, we can make one more plane to close. But I want to show you guys. See if I can move this chart down a little bit here. It's actually come lower because of where we are. It's like 430, somewhere in here. So we can make this a little bit better here. Yeah, we're somewhere in here. Right in here in this 430. And this line is inaccurate too. This line is inaccurate. It's right in there. You can probably get rid of this one too because you ain't gonna need it. But the only thing you really need to know about in here is you can see these peaks up here, right? Sell, sell, sell. We traded outside of our established trading area. Let me move this back here. Start this way up here. And you can see here that we traded outside of our trading area. We could take that nice and long, right? We still rolled it over, rolled it down super far, right? Rolled it over, come back up here, roll it down, stayed now inside our bounds, right? Reached a huge rejection here. This was terrible. Came back down, bounced off some support, and we traded it straight back up. We're coming into resistance here. So it's now, this was the trade, right? The next trade is above here, right? We start to come into some resistance. If you're bullish, you want to take this. You want to take this trade after, or if you're like, hey, we might go to close here and not gap up, but hey, Cap, we're gapping up, then you just put on some cheap put spreads, right, or free ones. You know that put ratio spreads, putback spreads, they're free, right? You know if we start to trade higher, you can cut one side loose and just make money on the way higher here. But so if you wanted to take this gap up and say, hey, Cap, fuck you, we're super hella bullish right now. Right, you're still gonna put some protection on here, right? Because I'm gonna promise you that the bears are just waiting to take this short right here. The bears are just waiting to load them up. I was watching them all day long today. I was watching puts get bought from when we opened until right now. They're just loading them. They're loading them up for the next week or two in anticipation of this rollover, one last rollover. You already know about the cross coming up. The death cross, right, coming up inside of the S&P 500, right? So this is their grand finale here. They want to take it down, right? And you know where we wind up down here? We don't wind up at 405 if we get that death cross. We wind up at like 390, 380, 370. That's how deep it actually goes. Down there, you're going to see Amazon trading at 2,000. You're going to see Apple just burn it off, 140 or less, right? You're going to see that happen. So if that takes place, there's high danger there. So how do you deal with that if you're a bull? Well, you take your money and run, right? Up here in this volatility zone. You either wait to pick it back up here, or if you're like, hey, Cap, I want to put on some zero dates, or I want to put on some Friday dates, some 0 dates for Friday, 3-day dates or whatever, or hey Cap, I want to take a long position here and not fuck with the volatility. I'm gonna put on some spreads, right? Some credit spreads or some calendar spreads, whatever, right? The one thing I'll warn you here is you grab your ratio put spreads to protect your trades. The other thing I would say to you is if you don't want to put that risk on, you want to be a bull that play trade safe, then you wait until we trade above this volatility zone. This is bull town up here. If you're a bear out there, what are you doing right here? Fucking you are fucking loading the fuck up. You are loading up short. You're loading up with puts. You're buying, baby. You're buying. And you know, Winky, I don't know if Winky's in here right now. I'm not looking at the chat, right? But he's a smart fucking trader. And he always makes that point, right? They're going to burn the shit out of bears. Well, the bears got paid here, right? They're not going to fucking pay bears right in this area that we're in right now. They're not going to send it down. We'll probably trade higher and then roll it over. So if you're a bear, what are you going to do? And what Winky made a good point about was if you're going to start getting short in here, don't be like, I'm getting the 18th. Because we know that all the puts are on the 18th. We know that they're all loaded there. So you might want to get it a week later, week after, or even closer. You don't want to be getting it where all the puts are because they're going to attempt to not print those 400 Ps, those 390 Ps. They're out there. There's still 390 Ps out there right now, currently in the market, being held in anticipation of this next leg down. Now, can we trade higher and take this bullish even higher than 440? I doubt it. See all that damage back there? Let's say we do get super bullish. We're still only going to trade it up to 440, and then we're gonna sell it down again. We'll consolidate until we can find more room to move higher. What you'll end up doing is you'll get the FOMC. Let's say we're bullish because of the stupid shit that happened in Europe, right? Let's say we trade this up here, and we're like, okay, the Fed's probably gonna tell us that the market sold off enough. The Fed puts coming in at least for in the next quarter. We have a insecurity with gas and all this other bullshit out there, and you shorted whatever bullshit they make up like Europe did, right? Okay, so we sell down here. Then we're going to be looking for consolidation phase, believe it or not, right? And then after FOMC, we'll attempt to make a move higher. Now, even if we make that move higher, it's probably going to be something like this. And the reason for that is because of the damage that we did over it took what? 2 months, right? 2 months basically. It'll be almost 3 months of damage. So you're not going to see it happen in like 5 days. That correction being over move, I made it over like the course of 15 days. It's probably more like, a month. Probably gonna take a month to get back to some kind of all-time highs. I doubt you do it in like 3 days. I doubt you do it on the 18th of March. You might, but I doubt it. I think you're gonna get some more consolidation. You're gonna need the market to have a reason to go up from here. You're gonna need the Fed to give you a reason for the market to go up. So I just want you to be careful of this as we trade over here. I want you to take money off the table as we hit 430. When we start to hit these resistance levels, why fuck with the banks? Let the banks do it. If you come into the close at 430, what do you do there, right? You already know. You're like, hey, Cap, I want to put a bunch more risk on. All right, take all your money off the table. Take 10% of it. Get yourself some 0 dates. Load up another 20 or 30% on some putback spreads heading into tomorrow at least, if not into next week or the week thereafter, okay? We've traded this before. We've traded this stuff in this channel all the time here. We know exactly where we are in the market. We know exactly where we're going in the market. And I want you to be aware that death cross that's forming on the S&P is no fucking joke. That is no joke. And I'm telling you right now, right, it's giving you fair warning. It's not like you're coming in and you're like one day and you come in and you say, hey, Cap, why the fuck did we sell down, 300 points in 2 days or something insane? This is nothing right here. Like this move right here, you'll see this move in like a day or two. It'll take a day or two, 3 days. You'll see a correction down. We'll look and see how deep it'll go. Yeah, something like this down here. And something like this could take place within the next week. Within the next week, you can see something like this, right? You see a move like down here. Let's say you see a move that's even deeper, like down here, right? You get trapped down here. What they'll do is they'll sell it down, right? You get some kind of move like this, and it's going to attempt to recover, right? You're going to be scared shitless, and it's not going to happen. That's going to be something like this. Yeah, I'm fucking this up, but you get the point, right? and that's a bloodbath down in here. I was looking at 360s, and I'm like, that's a bloodbath. And the worst part is right around this area here, it starts to set up these waterfalls of downward moves. You could see, if this is, I think this correlates somewhere around 12,000 on NDX, on NASDAQ. Don't quote me on this. I'll have to check it. But if you start to break below that 12,000 mark, good night, ladies. Good night, because you're opening the doors down below, believe it or not, to like the 200s. You're like literally opening the door down to into actually losing this market. You'll have a liquidation style event. You'll have literally have algorithms and the big banks sell this market whether you want it to sell or not. So we're getting very close to that point, and just be aware of that as we trade higher here. You don't have to save the entire world. You take money off the table as we trade up here, especially as we come into here, right? Let's say you're like, hey, Cap, we're going to trade this into the close. We're going to trade higher. That's fine. Just take some off the table up in here. Take some money and run. You want to leave a few runners. You want to be like, hey, Cap, it's giving it a gap again tomorrow and close. That's fine. Take some runners off. Take some runners off. Let me see if I can fix this for you. Somewhere up in here, you take some runners off. You let a couple run up in here, right? Maybe it gets rejected. Maybe we do this stupid shit that we normally do right up in here, right? And you want to grab that as well. That's fine too. But just know that as you're making these moves up, right? If we're going to make this move up either today or tomorrow, any kind of nonsense like this, I want you to be aware of that. Well, I want you to be aware of the fact that we can consolidate after this or sell it down after this as well. But what I want you to be aware of is that you don't want to be giving your money back. You want to take your money off the table. You want to re-enter each trade, and then as you in this zone here, if you're going to stay bullish, you have to put some protection on, because whether it rolls over now or it rolls over in 5 days or 3 days, it'll eventually print, right? So if you grab yourself some put spreads here of some kind, any kind you like, I guarantee no matter if we stop here or if we stop above, if they're 5 days out, they're in the money somewhere in here, or in the money somewhere over here. Eventually, we're going to trade back down a week or two, 5 days, 3 days, volatility into FOMC. And so let's say you're like, hey, I printed all those calls. I took the money and ran, and my put spreads are burning, Cap. What should I do with them? You just hold them, because 3 to 5 days later, we're going to correct back down, even if it's only not crazy deep. Even if we bounce off this channel here, you're at least going to come back into that money. You're going to be close to when they expire. You're going to take your money and run 20, 30, 50%. If we start bloodbathing it down, you're going to get the print on the call side and the put side. If we just start blasting off and never return, we blow past 440, 450, what do you care? You're making shit tons of money on 0 dates. And what do you fucking care? You could give a rat's ass if those puts print at that point, because you're just making hand over fist cash as we trade each level higher, right? Just be careful of this as we trade forward. We've had this conversation. I think we've been having this similar conversation since first week of January, right? Just be careful in here. I want you guys to have some situational awareness of where the market actually is right now, and even though we recovered from the sell-off down here, the real true danger that's in this market. There is some absolute danger out there. Okay, and we've triggered this. So this is where you say that when I say something to you like, hey, we're flashing a crash scenario, it's that 50 rolling over that 200. I mean, that's one of them. There's more, but that move right there is setting up a capitulation move. And this short covering in here, right? I wouldn't trust this at all. I'm not gonna trust this. So somewhere in here, you should get some rejection. I'll trade the rest of this up with you as we move forward. I actually did, you know what I did yesterday? This is you guys gonna blow your minds. I bought some calls right in here for like $1.86 for 425s. And then I fucking added more down here, right? For like, I think 70 or 80 cents. And then down here, dude, I was so far upside down yesterday in calls, I was getting butt fucked. So literally at like 4:13, I loaded the fucking boat trying to scared shitless. Loaded the fucking boat down here in calls because I was like, I'm already fucked. I just lost like fucking I don't want to tell you, shit ton of money. And I'm like, if I don't, I was like, my last chance here is to load the fucking boat with like another 5K in like dirt cheap penny calls. The only way I'm saving this trade. And I was like, at this point, I've pissed away so much cash, and I haven't sold any of this. I'm like, I'm just gonna fucking dollar cost average into 0 dates. And sure, then shit, it printed like I don't know, something stupid, like 1,000% on the bell this morning. Something stupid. I took the money and ran here. Now, I've been trying to get the stream up, so I haven't traded this at all today. Haven't had a chance to trade today. The stream still wasn't able to get up. I had to go in and work on like I had to work on the USBs and the power management and all that kind of stupid shit. So now my camera's not freezing anymore, right? My camera is freezing. God damn it. So my camera's freezing not for any bad reasons. It's because I haven't set my camera up on this computer yet. So fuck my camera. Hopefully you guys can just hear me out there. You guys can see all this kind of cool stuff. Okay, so we're going to close this down right here for now, for the moment, and bring up some bookmap for you. Fuck my camera. So I was trying to fuck with my camera right now, and it's set to my previous a previous setup that I had, so it's going to start freezing until I work. I have to go into the internals of the streaming platform. I was working on it, and I was like, fuck it, I got to get on for a live stream for them, so I can at least make an appearance today. Okay, so we are so we're on the SPX right now. I brought up the time and sales, along with the current order book. I figured you could look at the current order book and time and sales. I don't know if you like this. We can change this out. I've got some other stuff to bring up for you guys here to take a peek at. I'll show you the hero indicator over time here. Start to see that right around here. Start seeing that 115. Start being a little bit more neutral in the book here. You can see it also back here, right? This is back at 1240 or so, 1240, 1245. Starting to see a little bit of a crossover in the hero indicator as we move forward, right? Starting to see it. It's not quite negative. We had a negative move here, but this is consolidation in this zone here. If we start to trade lower, we'll end up feeling it at some point down below. Okay, some distribution, right? Accumulation, distribution as we move forward. If you want me to do something different instead of this time and sales, this is the current order book. This is the volume. I've got a trade counter, quotes countered, quotes delta. We can trade the dome, although I don't like the dome as much in this program. We can do time and sale. We're doing time and sales. We can add. I don't know right now. This is kind of spaced out, so I'll leave it there for now. Let me know in the comments what you think and about this setup with time and sales. You see this nice little resistance kicking in here, right? And yeah, we can see right here. We can see some of these sellers are in here right now, trying to start selling this market down, at least down to where the support down below here is 2571. We'll try to see if we can spread this out a little bit. Try to get a better look at the market. Got some VWAP down here at 425.61. We'll look lower. Down here at 420 as well. This is a nice level down here, right? We talked about that 420 this morning. That's where the buy the fucking dippers are at. So just keep your eyes on 425.50. We'll look a little bit. Hold on here if I can get this to do its thing. But you got nice buyers in here. This is not, you got buyers here, 427, buyers here at 426.50. Let's see if we can load up multiple tickers. I think we can load up multiple tickers, not have any kind of a drag. So you guys already see how fast this is happening, right? So we'll see how fast or slow that Tesla loads up and see if we get any crashing on the live stream here. We'll look up, see how fast Tesla loaded. Tesla's loading kind of quick. We'll add a connection or a configure add-ons. We'll add the hero indicator in here. Close this down. I saw Tesla had a nice little day today. We'll see how long this takes to load up and see if we can actually run more than one ticker at a time without a crash, like we were having before. And I'm not clocking in the power management yet. So I've got some tinkering to do So we'll see how this works out. Bring this back here. Start to see that resistance above, right? Resistance here at 859. Still sellers above at 879. 900, right? Start to see this volatility as we move forward. Let's look below and see where support is. Support's that same old place, right? 800. Nice big order book down here at 800 on Tesla. If you wanted to trade these levels, you could trade this up to 858.85, and then pick it back up again at 860.86 and take it then to 878.92. Possibly could squeeze through this, right? Possibly could also, if you're not going to trade higher than this, it would be done in futures if it was to happen, an 881 to 898.65. And then the big 903, this is where you roll the market over up here, right? You hit 901, you're like, woo, everything is great. But you got sellers hiding up in here. So you probably want to pick this back up again over a 910.71. All right. See if we can. I have to click to get this to roll. All right. So yeah, fuck the camera for right now. After the market closed today, I'll work on the camera so that I don't have to fuck with it. Because I have to rebuild this every time I launch one of these fucking things. It's like wait a minute here. Every time I launch one of these things, I have to do what? We'll just do the main display. We'll just move it behind. That's better. All right. So let me look at the chat real quick. That's another thing. Because I'm having problems with chat feature here. Nope. Hold on. My chat feature is not. My chat is stuck too. Refresh the chat, maybe. See if that works. Nope. See if I can roll this over a little bit. Oh, there we go. All right, now I can scroll your chat. Okay, so I'm going to read some of what you guys are saying up here. I think the window to make new bottom is closed, but I'm in that minority. Oh, so Winky, you think the window to make a new bottom is closed, but I'm in the minority. You're in the minority. I think we can trade higher. We got a little SPY volume as the bounce to weak as fuck. That's typically we typically get good our best bounces is on low liquidity. In my view, more volume actually to me is more of a bottoming effect, which is we trade down. We'll push it down harder. Only got 4 minutes to save the world. Wheat is down 6.6%. Yikes. Yep. What would you negate this depths of hell scenario? Oh yeah, that's a good question. Liquid's asking, what would negate this depths of hell scenario? And you got it from me, right? I showed you on that other chart where you'd want to trade higher than. Let me take a look on this chart and see where you'd want to trade higher. How do you negate? It's a great question, actually. Outstanding question. How do you negate the depths of hell scenario? It's a kick-ass question, believe it or not. Let me look at ES, believe it or not. ES sometimes I like SPX for the real book, but I like ES because they give they have some little bit of extended moves in the market. I always like to see the move higher. Let's look at SPX. It's a great question. How do we negate the depths of hell? Fair question. So hold on here. How do we negate the depths of hell? The first place to negate the depths of hell is, in truth, the first step is that you trade higher. Mark this down. We're going to get yourself a piece of paper and pen out there. The first bullish sign is a trade higher than 4420.19, and that holds. That's your first light. Like if you're gonna crack the door, if you're like scared, you were like, I don't know, being tortured in a dungeon somewhere, and your jailer and your punisher fell asleep or left, and you saw a brief hint of light that you're getting out of there, brief hint, it's a close above 4420.19 currently. Now, even then, you're not out of the woods yet. You want to then see your next point of contention would roughly be, yeah, you're somewhere in there. That's where you are right now. That's what you want to break higher than. You want to consolidate, though. You want to consolidate then at 4423.19, right? And you literally need to break higher than 4586.68, somewhere in there. So basically 4600. And then that situation is negated. And this is actually, I'm going to put an asterisk on this as well. If you break higher than 4412 and you start to consolidate and then we roll over there, you're fucked again. You're fucked again. So there's actions that could take place to roll us lower still. But the first thing you're looking for as a bull is we break higher than 44.14 or so, 44.20, and then we start to at least, at a minimum, start to consolidate. That's your first breath of fresh air. Otherwise, if you don't do that as a bull, if we don't do this as a market, we are set up for that end of the world scenario. And that's what it is. I mean, you can fucking argue it till you're blue in the face. You can deny it till you're blue in the face. But that's what it is. That really is what it is. You need to stop this cross from happening. And once you break above this previous low, or this previous high, the real true it's all over is trade higher than 4600. That's when you can be like a bull and be like, fuck being a bear, I'm done, I'm putting on the bull clothes and I'm taking this all day long every day. And that's a great question, whoever asked that. I don't know who asked that now. Sorry, I'm going through the chat right now. Pasky said we expect high inflation tomorrow. Here we go with the mind games. Yeah, fuck the mind games. The stream is just super clear. It's like night and day with how it appeared before. Huge upgrade, calf. Fuck yeah, right on, Tom. Yeah, I just got to tinker with it at this point. I had some problems. I guess when I first got the unit, it was shaken, and there were some problems with it being shaken, and so they had to go back in and do some repairs. And like I don't know what that shit is. It's like I don't know, some kind of like heat shit. And then one of the boards was all fucked up. So whatever. I gotta get a kickstand, I guess. Like I have to get a kickstand, a 3D printer kickstand, and prop this thing up here. So we'll work on that. Let me see here. Yeah, I dollar costed averages into fucking zero dates. I did. I dollar cost averaged, and dude, it was so scary. I was so freaked out. I was so fucking panicked. I didn't want to, dude, so I stopped looking at the market last night, and I'm like, I'm just going to put this shit together and get it done. And I'm like, I ain't looking at futures. I'm like, because dude, I could have been ultra fucked. Ultra fucked. Ultra fucked. All right, the stream's super clear. Right on. Yeah, got all that. All right. Glad to see her back. Yeah, good to be back streaming, dude. Okay, so what do you got? Okay, so what do you guys want me to do for you right now? You can't, don't be shipping PCs ever. And if you're transporting them, you want to be the one handling them, like your hands on the PC, holding it in your lap. Or just don't put it together, and you put it together when you get it. Like I had somebody build this for me, and fucking stupid. Okay, so you want me to look up? How about this? So I haven't been on for a while. Why don't you guys give me some tickers that you want to see? You guys can see here that this same area down here, right? This 42575. We'll see if we can catch a bounce here. If we can't, if we start to trade it down. We'll look for if the rug gets pulled or not. We'll revisit SPY here in a minute and see if we get We'll see if we get the rug pull. Where's that? What's that number down here we're looking at? 42572. Okay. I got fucking bears. They're like, oh, I'm so short right now to 4572. I know the bears are all quiet. They'll pay attention to this podcast and be like, or the stream be like, oh, I'm so fucking short right now. He's talking about going down to 42570. And so we'll see if this holds or if we get a rug pull. I don't like not seeing more of this book over here. I kind of want this book to be a little bit larger so I can see the numbers. I don't like seeing it so low. So we're gonna have to talk about this over here. I'm not sure I'm down with this. Yeah, what are we looking at here? Price, the size, the time size, price. Yeah, you probably don't need that, do we? We don't need that there. See if we can scooch this over. I don't think we can. We'll work on this. I don't like this book. I don't like it showing like 2,500 buys and 2,600. Kind of like seeing the 50,000, not the 25,000. Kind of nonsense that it's showing right now. But whatever. We'll come to it. We'll get back to it here in a minute. So we'll work on this. What was the what were you guys asking for here? You guys are asking for me to pull up charts. Oh, trade the news. Okay, we'll talk about trade the news here in just a minute. I just had a fight with Trade the News this morning. I had a giant email fight with Trade the News. I might be switching my news provider just because I'm pissed off. There's a couple others out there that I've used in the past that are pretty good. I think I might switch. I'm a little fucking pissy right now with Trade the News. And I don't want to get into it publicly because I don't want to disparage them. But I got into I had sent an email a week or two ago, and then this morning I got an email back, and the guy was like, go fuck yourself. And I was like, oh, whoa. So I'm like, okay, I can go fuck myself. I'm like, I'm gonna go fuck myself right now, watch. And so I got to do a few things and deal with them. So in the meantime, what I'll do is I'll put up a different news source for us here in just a few minutes, okay? I'll get a news source up for you guys. But I just had a big blowout fight with him. It's been going on for a couple days now. Let's see. Look at CL. Yeah, SPY. I did the same thing the other day when I actually bought 100 calls at close instead of 10. Anything on Flow Algo? Yeah, we can look at Flow Algo right now. Dude, I can run all kinds of shit now. Like, this thing's a beast. Hold on a second here. Give me just a second. I'll bring up Flow Algo. We'll roll through it real quick. Or you know what? I was having problems. I tried to log in. It said that I was having some weird problems. It says I've got an authentication problem. Please contact support. I don't know what that means. So I'll read them off to you. I have an instance of it running. I'm going to run this inside the Discord for you guys live every day. So I've got some SPY puts coming in March 9th, 426p, $64,000. See if I can see anything else. SPY calls came in at 136. 3 racks of them. March 11th, 428 and 429c. Uber calls, baby. Uber, May 20th, 30c, 3.3 million. That's my same Uber guy. That's my Uber guy that's been loading the fucking boat on Uber calls. As a matter of fact, that's where my Uber calls are, is in May. And that's pretty neat because I have Uber calls for May 20th. And this guy, I remember I talked about when you're buying golden tickets, you go a month later and they'll keep rolling that position to a further out date. And sure enough, so this is probably a good trade. My trade's probably still good at this point. That's all I'm seeing right now on Flow Algo. The ISP is banging today. ISP is super banging my connection. I'm not getting strangled. Everything is banging. How unbearable is Bill Ackman during this war? Tweeting nonstop. Yeah, he can go fuck himself too. Yeah, of course he does. Of course he has a position that he's pushing. Fuck Bill Ackman. He's a fucking douche. He is. Come on. I mean, I like some of his plays and shit, but you can't say he's not a fucking douche, right? Even if you like Bill Ackman, you know he's a fucking douche, right? He's still a fucking douche. All right, so I'll bring up Rig for you real quick. I agree. He's a fucking douche. We can all agree that Bill Ackman's a douche. You know Bill Ackman's that guy that you know that Bill Ackman is that guy that he's a douchebag. He ain't gonna be your friend. If you met him somewhere. Look at that beautiful little bounce down below in the SPY. We'll look at Rig, and then we'll bring up oil, and we'll bring up I can't bring up CL because that's on. I don't think I can, but I'll try. What's a good safe spread? We'll talk about that in a moment. Tesla, por favor, looks like 850 pin. Just increase the resolution of the monitor. Yeah, I gotta work on the my monitor is all fucked up too. I even switched out the monitors. I'll talk about that later. Kareem, Uber, that's that same bull. I mean, that's that same whale. That same whale keeps buying those calls. He just keeps loading the fucking boat on those Uber calls. That's like the second time he's done it. All right, so we'll look at let's look at Rig. Not really seeing a lot on Rig. Sitting on some support here. We know that the 438 would be the next stop for Rig. You know that Rig is news driven to an extent. Some nice support here down at 454. Another stop at 427. 401 and then 382. You know, I don't know what to say about Rig right now. I want to say that it's definitely going to be driven by new, or it was. Well, I don't know. It was driven by fake news. I'll say that it was driven by fake news. We've got more sellers than buyers currently. Looks just like profit taking on Rig. I've talked about that in previous podcasts or in live streams. I'll talk about it again about, I want to talk to you guys at some point about war and is there impact in the markets or not? Is it used as an excuse to dump the market at key levels or raise the market up at key levels, and how it's used? If you go back and look at all of our wars, there really isn't too much correlation. It's just the hot topic that's used to dump the market. And there's some other things at play too, which would be we can look at oil going back to March 2020, and you can see right there back in March 2020 the fair selling in oil, and then that's the newest trade, right? It never came back. Of course, it's going to come back at some point, and of course, the equity market is oversold or overbought. So what do? You remove your money from the equity market, you put it into the oil market, you trade that up, find yourself some good fucking news. And as a matter of fact, it's not shocking to me at all to see Russia invade or pick this time to invade, because it lines right up for commodities which they have and can make a lot of money off of going up. So I think that part of this, believe it or not, when you talk about rich people making money off of war, this is no different. Okay, so we're going to get rid of Rig now. I think the other day I was talking about trying to do a live stream or a video on that topic specifically, because it's kind of a disgusting topic to talk about. It's kind of a gross topic. It's not a good topic to talk about. Let's see here. CaptainJimJames is saying that we'll reach 4,000 in SPY by mid next week. What do you think of him? Don't know. I think I know who he is. There's a couple pandas out there. I think there's a couple pandas out there. I don't follow those guys. I see them in my feeds every once in a while. They'll pop up on my feed, and you know, to each their own. You guys all trade what you want to trade out there. I don't think, you know, the thing about, like, let's say so I don't think it's a matter of, hey, do we trade to 4,000 or not? I think it's a matter of managing your positions and that you trade to the right always. So, but you do want to be aware of the threat below. And you want to be aware of how you trade above, right? So that when we encounter those zones, encounter support and resistance, that you can take a measured approach, right? If we're approaching resistance, you're going to take some money off the table, some profit, right? And then if you're like, hey, I want to trade through this volatility, you can do that, but you still have to put some protection on. If you didn't want to put protection on, then you have to wait until we get above that resistance. It becomes support. And then you can trade more freely, right, without any kind of protection on to that next resistance level. And if we get rejected here, you want to have had some protection on. I mean, so I don't know. He doesn't know. Nobody knows if we trade down to 4,000 or if we trade up to all-time highs. Nobody has that answer. But we do have an easy way to find out, or an easy way to measure how much risk we put on, depending upon where we are. As a matter of fact, right, as a prime example, yesterday when I was losing all my fucking money into the bell yesterday, the one reason why I kept adding into that bell was because I looked at the entire market and said, well, we're oversold to a point where I don't want to lose all of this money I've spent. And I know if I just add another 5 or 10%, because it's so dirt fucking cheap, that I don't want to lose, I don't want to lose this huge bankroll. And then we wake up tomorrow and we've recovered, and because I didn't spend another $5,000, right? I don't want to lose 30, 40, 50 grand. And because I didn't spend another 5, now there was a high chance that we were going to limit down overnight, and I could lose, some real big coin. But at the same time, that we could have limited down. We were oversold, and let's say I just cut my position, I would have been fucked today. So I went back in with a little bit more. Okay, and that's the same thing where we are in this resistance zone. You can start getting short here, and you can get more aggressive as we go higher, right? If you're a bear, you're going to be like, hey, like I'm gonna get in with some in the money put spreads, and if we start breaking through, it's going to become a short position, and then it's going to become a monthly puts, and it's just going to go naked 0 dates if we get up to 440, right? You're just buying 0 day puts and just throwing money at the fucking fire because you know it's going to roll over at some point. That's the same thing. Same thing as what happened yesterday. In matter of fact, had they burned yesterday, had we opened with a limit down today, my next move, because I lost all that money, would be to buy 0 dates right away, calls. Maybe not right away. Probably, maybe right at the bell a little bit, and then a whole bunch more by like 10 o'clock, 12 o'clock in the afternoon. But I would have to make that money back, which is a big thing that traders and investors have problems with. I made that post on Twitter yesterday. I want you to be aware that if you're a bull and we start limiting down, to not panic and sell because of where we are. You just kind of have to hold on at that point. And then another thing you have to learn as a trader and an investor is that if you get knocked off your horse, oftentimes it's at a point where it's going to reverse. Oftentimes it's a point where if you go deeper in, you actually do make your money back and then some in huge profit. Oftentimes what happens for new investors, new traders is you're at capitulation points, and you capitulate, you lose all your cash, and then you're actually wounded and you say, I'm not going to buy, even if we turn around tomorrow, I'm not going to buy. You're just kind of in this like, no, and then the move happens, then you're kind of out of fucking pocket, and then your timing your trade's wrong. It's like, it's all fucked up. That's just a matter of time. You do that shit long enough, and you miss reversals long enough, up and down, and eventually it's like a fucking hammer in your head, and you're like, I'm sick and tired of losing money. That's all I got for you. So there's a nice here bounce here on the SPY. We'll look a little bit lower and see if we have any more levels down below. This doesn't look too bad. I like this. I like this here. I mean, I don't think we're going down here to 420 currently. I don't think we are. We still have some sellers above here at 429. You can see these sellers. See that yellow line just kicked in right there? You know that there's sellers there. So how do we get past this? The only question that you have to this is, there's a couple things. If you're a bear and you want to take a real short position or a long put position, you're probably going to wait for the close. Not guaranteed, but you're probably going to be waiting for the close, because what they'll do is they'll squeeze you out. They'll max pay in your ass. You'll buy puts here, like real puts or real shorts. Like, I'm going to hold these in the next week or something. Probably want to wait. Not guaranteed, but oftentimes you wait for near the bell. You wait until 4:15. And then you grab a nice in the money short position. And if we gap up, you can add again tomorrow. Get more aggressive. So that's what I'll be doing. So currently, I'm not actively day trading today. I sold all my shit this morning. So and I was working on this bullshit here. So what I'm going to be looking for? What am I looking for into the bell? And I'm going to be looking for us to be moving up. In all honesty, I'm looking for a move up into the bell. And my next trade is going to be maybe some 0 dates into the bell, possibly some calls. In reality, I'm going to be setting up a trade to take on some put spreads that are going to expire probably the 18th or later in the money. So if I can get some at like 430 again, I had some 430s last time. If I get some 430s or something, and if I pick those spreads up into the bell, what I'll do is I'll also grab some 0 date calls as a married trade, right? So I'll get some 0 date calls that are dirt cheap, and or 1 day or 2 dates or whatever, Fridays or Mondays. And although I think we trade sideways tomorrow, probably going to consolidate, or have some weakness consolidation maybe tomorrow. But I want to see if trade's going to go forward. And then if we fucking fail, if we start burning it down, I'm not out of pocket. I haven't lost a fucking cent if we start selling on those 0 dates, because I've got those put spreads. And I have some firm faith that if not today, if not, well, when is the, let me look and see here. I have some faith that between now and the 15th and 16th, that there's going to be some weakness in the market at some point. I have some firm faith there that we'll revisit 430 at some point. I'm not going to give it like 100%, but I'll give it like an 80% chance we're going to revisit 430. I'll give it 80% that we revisit 430 by FOMC. And if not, we'll revisit it during quad witching. And further, a real strong move up probably won't happen until even after the quad witching, right? Normally it takes a few days. You won't see the move until after the quad. You'll see it like that Monday or Wednesday or Friday of the following week. Not always, but sometimes it waits. It burns everybody down. You kill all the bears, you kill all the bulls, and they kind of do a flush of everyone's position. Now, I'm not, so that doesn't even account for, are we going to see 400? I would get more aggressive if we start trading below 430, right? If we are able to trade higher than 430, and we start to come back down and revisit it, and we start trading through it, I'll add more puts on at that point, okay? Hey, SA just sent a token sent via PayPal. Right on, SA. I appreciate it, my man. I'll check. So Friday's cap stream, I'm going to do a thank you for all you guys who are going to drink a whiskey together, and we'll do some celebrating, because you guys are the ones supporting this channel. You guys are the ones that got this computer is here because of you guys. So this is all to help you guys become better traders. This is help to support you guys in your trading journey. And we're gonna get Flow Algo. So what you guys can do, my thought was you could go into a voice channel on Discord, open a small window with the live stream of Flow Algo going. You can watch this stream here, and you can you'll get me have the ability to be able to flip back and forth and show you guys charts against bookmap and that kind of stuff. So this live stream is more of a test, and it's basically working right now. It can be it can be better. I have some work to do on the cameras, and I got some work to do with what I'm going to have going on here in the background. And I literally just got done talking to Trade the News. So I'm going to blow their asses up on Twitter and fuck with them. And then I'm going to sign up today at the end of the day for a different news service. And we'll run a different news service. I said I've run a few. I think I've run 5 different news services over the years, and they're not all bad. Some of them, the cheap ones, they lag. They're like 15 minutes late. There's only a few of them out there, though, that actually trade or actually are real time. Oh, yes, Emerson, we can chat. That's another thing I want to tell you guys. I was able to, because I'm able to run this new computer, I can actually see your messages now in TweetDeck. I have a display that's dedicated just to TweetDeck. So yes, Emerson, if you're out there, we can chat. Absolutely. I've only got it connected to my public profile. So I haven't checked my DMs yet on my. I haven't loaded up at Captain's Alpha's messages into TweetDeck yet. But I can now live watch TweetDeck and I'll be able to, at some point today when I start live streaming in Discord, I'll be able to see what you guys are saying in Discord. So I'll be able to move between the chat box on YouTube, the messages on... who's getting a restricted error on YouTube? Doughboy is? How's Doughboy getting a restricted error on YouTube? Can you guys see me? Yeah, brother, I got you, Emerson. I got you. Yeah, so you guys, like, in the background, you guys are gonna love this shit, because I'm gonna get... Discord's gonna get up and running. I can see you guys. I'll be able to see you guys in Discord. I had to get some so my displays are all on HDMI, and I need them to be in DisplayPort. So I just ordered from Amazon a bunch of DisplayPort. They should be here today or tomorrow. I need some DisplayPort connectors so I can hook up some more displays so I can track all this shit and see what you guys are doing. So Doughboy Equity is saying that he's got a restricted error on YouTube stream. Needs a password or something. Let me see. Let me take a look and see what's going on. Hold on here. Let me see what's going on here. Participants. Let me see. Let me see here. I ain't seeing any of that there. Here. I don't know what the fuck I'm doing. Right there. Look at that, just came out. Death cross in the S&P. Look at that, huh? News. Shocker. There's a death cross on the S&P. We were just talking about that. Okay. Let me see what's going on here. Yeah, and someone else was saying that I thought I muted a user. I didn't think I blocked the user. I don't know how to block people. And if I am, I don't know what the fuck I'm doing. I have no fucking clue what I'm doing. Send feedback. Manage. I have no idea what the fuck I'm doing here. Oh, no. Restrictions, visibility. See if any restrictions that impact your video. I answer to earn money. No. Remove a restriction. I don't. What is that? Restrictions? What? Manage restrictions. Filter your video. Select your filters. Oh, okay. So Doughboy, if you're listening. Oh yeah, Doughboy's probably got some age restrictions on his videos for his kids or something. Let me talk to Doughboy Equity. He's probably got kids. Doughboy Equity. Hold on, let me talk to him real quick. Getting age restrictions. Let me apply. Did you set age restrictions? He's probably got like kids at home or something, or his wife or something like that. I think I did this right. I don't fucking know what I'm doing here. So Doughboy, if you're in there, close that up. I don't know what the fuck I'm doing here. Yeah. He's got to sign into his... Doughboy's trading in his Robinhood in his parents' basement. Yeah, did you see that shit? Did you see that Market Watch? Did you see that Market Watch article came out? I was like, what the fuck is that? They only have like 2 weeks to get this huge crash. 350 and SPY 4 earnings brings back logic in the market. I agree with that too, Winky. I agree with the runway. Yeah, I don't have any PC games on this computer. This is all just this is your computer. You guys basically own this. Same mine. This is for all of us. So this is for us to use. It's for the community. Can you see the stream on Streamlabs? Wait a minute. Yeah, I just responded to him, and I think, yeah, it's probably his IT department, or it's probably his. Yeah, I unpaused book map over here. It's back to being unpaused. I forgot it. I apologize for that. So right down in here, 425, right? 1 bounce, 2 bounces. I need to get this fucking mic remounted too, because I'm cocking my head all the time, and I gotta mount that tonight. I'm gonna mount a mic tonight. Yeah, so I don't normally respond to DMs. You guys have to understand that. Like, so I have my DMs. It's like emails constantly, notifications constantly, interaction constantly. So I'm like trying my best, and oftentimes I don't have direct like look at access to DMs. And so now that I'm able to run this setup, I'll be able to at least see what you guys are asking in real time, rather than, because right now what I have to do, or before today, what I have to do is I would have to like go into my notifications. Then I would have to go into DMs for both accounts. Then I would go into Discord, and then I'm also interacting on YouTube. And so with this new setup, I should be able to at least interact with critical questions that you guys have, things that I can actually respond to, at least when I'm on. I wasn't able to do that before because I had too much shit going on. I got my own trading platform going on over here as well. So I'm going to take a look here. 213. Watching SQQ calls, March 11th, 46C. Let me see if I can. Oh, okay. Hold on a second here. Can I add another account here? See, that's weird is because, hold on. It's weird because, if I add, hold on, I'm gonna turn this off. So the problem here is this. So you guys know, okay? If I link on TweetDeck both of my, if I link on TweetDeck both of my, if I will link on TweetDeck both of my accounts, then if I ever get banned from Twitter, they'll if once you link them in TweetDeck, then they know, right? They kind of fucking know who you are. So I would try to keep them separate. All right, so what do we got going on here? McDonald's says quitting Russia to cost $50 million a month. I'm gonna read the news to you guys today, okay? So as the news comes out, I'll read it to you as it's released, and then I'll have the verbal news back up for you guys tomorrow. I'll try to read it as we trade forward here. I'll try to read it to you guys if I see anything in particular. So let me know in the chat. Bookmap pause? Yeah, that's me. Can I see the stream on Streamlab? Hold on. Can I see the stream on Streamlabs? Yeah, it's not. Yeah, it's not paused anymore, is it? Discord help. Probably his mom disconnected from the interwebs. Okay. I missed all that shit. End of QE is today, question mark, and CPI tomorrow. Yikes. If CPI moves the market is really stupid. Yeah, 2 good points. Earlier I wanted to go over the economic calendar with you guys for tomorrow. But the market doesn't care as much about, but you know, the market, Well, it does. The market does care as much about hold on a second. It does care as much. It actually does care about the numbers that are coming up. But it uses bullshit news for why it sells off here. Let me see. Let me just take a peek here. Keep our eyes on the prize down here. We're still looking at this VWAP down here at 425.57. We'll see if we get our third tap, or if we start to break through and look for lower numbers here. So we got 1, we got 2, and we got 3, right? And we talked about how deep do we sell down if we break through here. We looked at it earlier, right? Start to break down below 425.50. This is your oh shit moment down here. And the next support level is 420, okay? Just keep that in mind, 420 down below. You don't want to break below 425.50. I'm going to move this down over here for myself as well. You want to see a bounce off of here. 425.50 down here, VWAP. Sometimes you can trade under it slightly and then get a reaction. But if you don't get a reaction down here at 425.50, if you see this book, matter of fact, I'm going to change this. I don't like this. I ain't liking this. Hold on here. For some reason, this, like even this right here. Why is this, I forget how to do this. There it is. There it is. I always forget how to, somewhere in there like this. I gotta change this. That's current order book. Notes. I have to adjust what it's showing in the order book. I have to work on this. Somewhere down. How do I expand this? Oh, no. Hold on here. Just a second. Yeah, I need this to be showing up more, this 51,000. I'll work on this tonight. Watching this cross down below here into neutral territory. And let me know in the chat if you think that, I want to know what you guys think about, let me turn some of this off. Let me know in the chat if you think that we're going to $425.50. Keep that in mind right there. That's the buy the fucking dip. Turn this off. We've got March 9th. So this is for today. I'm looking at some options for today, right? So March 9th, 420p. There's 200,000 contracts. Those are 8 cents a piece. We got to murder those. They got paid yesterday. Fuck those put holders. Straight up. Fuck those put holders. They got paid. They deserve nothing today. Should go to zero. Those contracts should trade to zero. There's 200,000 of those out. There's your, hey, do we sell it down moment. If you're a bear, if you're uber super duper bearish, 420p's expiring today are 8 cents. If you think we're going to trade it down, we're gonna lose it here. They're only 8 pennies. They're dirt cheap. If you're a bull, on March 11th, there's still 90,000 contracts on 420p. Probably because the anticipation of us trading sideways that would be an expectation that we trade sideways or down into Friday. Those are only $2.14. For Friday, right? If you're like, oh, I want to buy calls for Friday on a gap up, they're still expensive. 440s are off the table. Those are only 41 cents. No one believes they're going to 440. 430s are $3 right now. Those are kind of pricey. I think those are overpriced for a Friday expiry. I think they have nothing but to do but go down. Matter of fact, they're $3 right now. I'm betting that they go down. I bet by Friday or Thursday, I bet they're like fucking 60 cents or something at some point. No, they're pricey right now. They're $3. So you got to pay to play on 430s for the 11th. On the 9th for 430s, they're only 29 cents. 30 cents, 28 cents for 430Cs for today. I think if I had to guess, we're going to be weak. Down to 425, maybe 422.50 or so. And then we could rip it into the close. We'll see. But 420p's are 8 cents. They're dirt cheap. Dirt cheap. Dirt cheap right now. Dirt cheap. Might be worth buying those even if you lose them. It's just a gamble. Yeah, let's talk about wheat real quick. Wheat's kind of a weird thing. Like, the weird thing about wheat is, like, they're like, well, Russia exports 70% of their exports are wheat. I'm like, fuck that. Like, Canada and the U.S. could produce shit tons of wheat. My family ranches, and they also plant lots of crops, too. And they rotate crops in and out. But there's no demand for wheat. I bet China would step in for wheat production as well. I think most of this has to do with how cheap commodities are. In all honesty, I think the fear that's been stoked up is bullshit to make money. And I think it's interesting. The ECB, or not ECB, but the EU, I think, said they were going to do price controls. Now, I'm not going to get into the whether that's good or bad or not. Whether price controls are good or bad, but it's rare that they do that in the United States. We've only had a few instances of that in the United States, but you can't say right now. It's like yeah, like the price of oil was fucking low. It has to come up. You can't have oil that goddamn cheap, or I shouldn't be saying goddamn, but you can't have oil that cheap as it was, especially when there's demand. Yeah, they have to make money at some point. It really wasn't that expensive, or it was dirt cheap, is my point, right? And then you've got real inflation out there, but then there's this part of or not the market, but the economy. There's this part of businesses that are price gouging. And so part of me is like, yeah, you know, I just read an article. Joe Donut turned me on, and I'm reading articles where dealerships are saying, well, we don't want to cheapen our product, so we're gonna tighten our production at this point, even if shortages are released. So what their point is, well, shortages, we were able to mark up a truck for an extra 20 grand. We like that money. We like not having products sitting on a lot. We don't want you to be able to negotiate. So what we're gonna do is we're gonna fucking nail you for another 20 grand, and we're gonna make shortages a thing. So they're artificially fucking you, right? Because they can, and because they're fucking assholes, and because they're scumbags. And they're not the only scumbags out there. You know that there's gonna be scumbags out there. You know that there's scumbags out there with shipping, right? You know that there's all layers of shipping. Now, I love unions and all that, but you know that we have bottlenecks, and what company wants to see a bottleneck improve? Like, what fucking company that's able to charge, you know, $30,000 for a container, $40,000 for a container, where they were getting like $3 grand or something, some kind of nonsense prior to? Of course, they're gonna make more shortages. They're gonna squeeze it for everything that it's worth. Everyone would. You would too. If you started making an extra 300% a month or an extra 1,000% a month, not until you're pulled from that titty of money, right, kicking and dragging, are things going to change. And so how does that change? Well, if the government doesn't do it, then it has to be some other guy that's like, well, shit, I'm going to start buying tankers, or shit, I'm going to start buying trucks, or shit, I'm going to do this, or I'm going to do that, right? Parts that you can't do. You can't fuck with ports to an extent, but and some inflation doesn't ever go away. We already know that, right? That's a good point, Winky, without a doubt. Tesla drivers eat soy. I did find it hilarious. I did find it hilarious about Tesla this week with Elon Musk, because Elon Musk is like, I was having these conversations for like a month or 2 or 3 months. And I'm always trying to I'm always scratching my head, because I'm like, man, it's a really weird marriage between a lot of Tesla gang and Elon Musk, of course, because they don't always meet eye to eye. But what I always found even more bizarre was like Ford, you know, your stereotypical like all-American male who's like, fuck EV, and I won't be doing my gas guzzling truck, and I want 5 miles to gallon, I'm like, I'm so surprised these guys don't like Elon Musk. I'm like, Elon Musk is more like those fucking guys in a lot of ways than a lot of Tesla gang. And of course, no one wants to believe that. And he's telling you to pump for fucking oil and turn the gas on, rightfully so. Because you have to. Well, you don't have to, but that you don't really need to turn pipelines on. You need these oil companies to do some shit, which they're not going to do, because they're not going to want to spend money when the money's flowing. But my point behind it is, you see Elon do this stuff. Yeah, I know that there's some of my own friends are like, you know, you don't want to see escalation of war, or even the chance of World War III. Then you got Elon Musk busting out the Starlink. And not only did he bust out the Starlink, but we talked about the mesh network of these satellites, and they were turned off over Ukraine. You could see a big giant hole. Not a hole, but it was turned off. And it's turned off in India, some other places, Russia, until they can get through the bureaucracies to turn it on, or even not. Like right now, if you sail, right, if you're a sailor, you already know this, like you can't take certain tracking or GPS devices in certain countries, even ones you'd think you'd be okay going into, like India. You can't bring an Iridium Go is illegal all over the world. Basically, one of those things. They're considered spy devices, depending on where you live. But it was interesting to see that Elon, took a chance doing that. He took a chance by getting that shit to Ukraine really quick. It's an aggressive act. It's an American aggressive act. It also doesn't look good for Starlink. If you're against Starlink or you're against the U.S., you should be scared shitless at that point, right? Because you got the fucking networks there, the satellites are there. At any moment, he can turn them on anywhere he wants in the world and get that shit to you anywhere in the world, which is very pro. It's not anti-war at all in any way, shape, or form. So I mean, if I'm like a gun-toting 2A, freedom-loving, shit-kicking, truck-driving American, I'd be like, "Fuck yeah, Elon Musk." And so I think that's a super neat marriage of having like people with different thoughts and viewpoints, and then you got Elon in the middle of all of it. Kind of in the middle of all of it. You like a guy you don't want to like for some things on both sides of that coin. I think it's hilarious. No, I didn't see it. I'll watch it though. The South Park episode. One of my favorite South Park episodes though was when they were drinking Smug, a couple glasses of Smug in San Francisco. They're like, smell that Smug, and they're farting in their cups, then sniffing it up. Oh yes, I will. IPOF for accuracy. Roger that. Oh yeah, winky face, and then margin calls begin around 3 p.m. on commodities. We should talk about that. You guys, you guys want to know on commodities specifically when you have those ripper high movements. Let me see if I can. There's like a pencil in here or something like that. Create a screenshot. I thought I had a pencil. Can I do a line? Oh yeah, when you guys see moves like this, right? Oh shit. I don't know what I'm doing here. I fucked this up already. I have no fucking clue what I'm doing. Looks like my line is staying there. Oh, wait a minute. Oh shit, what did I do? I guess I gotta delete this. The line sucks. All drawings? I don't know if I want to, but we're gonna leave this one back here because I fucked this up. So, when you guys see those ripper moves up high, if you're gonna short them down, like let's say you're gonna short oil down, you can take the initial short, but get out of it quick because it'll shoot back up again. You want the best way to short a ripper like that in oil or any kind of commodity is you take the second short, not the first one. The first one down is usually brief. The second one down is deep as fuck. Normally deep as fuck. So you wait for the first one, there'll be a recovery, and then you take the second short and you hold it. I don't know. Some of you guys probably know that, but some of you guys probably don't. Yeah, so I just ordered Starlink because the new Pro model allows you to change where you're at. All right, I gotta watch that then. I'll watch that tonight. I'll have to watch the South Park tonight. The Maverick of Wall Street. I like that guy actually. That guy's pretty awesome. And I'm not a bear, but I like watching him. I haven't watched him in a long time, but I have watched his shows. I don't know who that guy is. But I watched his show. One, because it was well produced. Two, though, that guy's got to have a background in some kind of production of some sort. I don't think he's an actual trader either, because dude, that guy puts the shit together. Like I was looking at one of his shows, and I was like, man. I was like, not a show, but like he puts out a show every night, right? And I was watching one maybe like 3 months ago or 6 months ago, and I was like, fuck. I was like, what this guy needs to put in his shows every night, right, wrong, whatever his viewpoint is, doesn't matter. But his show is the quality of a TV show. Like he's like a few steps away from having a show on like CNBC. If you look at the quality of that production that he puts in, the quality of his writing, the quality of the editing, that guy does bang up job. Probably one of the best produced shows on YouTube. If there was like hey, how good of a show, you got a better show out there, like production wise, he's pretty much got the show on YouTube. He's fucking hilarious too. He is fucking dude. The guy's got it, dude. I don't know who you. It's the only show out there that I've questioned. It's the only show out there that I've questioned that I've been like, man, is this like, is this from a hedge fund? Like, I'm like, is this a hedge fund out there trying to swing retail trade? I don't know who he is. I'm not saying that he is that guy, but the production level that goes into that show is insane. If you haven't seen that guy, Maverick of Wall Street, watch him. He's worth watching even for a contrarian viewpoint. If you're a bull specifically, he's a great contrarian voice on YouTube. I think he's got a presence on Twitter, but I don't follow him there either. But the guy's fucking awesome. And I'm like, man, this can't be one guy. If it was one guy, then he's got to be like he's got to be some form of a, what's going on here with the SPY here? Kind of just deciding what it's going to do, huh? Doesn't know what it wants to do right now. There's that target above 430. A couple of levels down here, 426.12. Billions just had a YouTuber telling people to buy stocks. Oh, who's Billions? I don't know Billions. Maverick was a truck driver? Well, I'm calling bullshit on that. Bullshit. Who's Billions? I don't know if I believe he's a truck driver. That guy's got skills. If that guy is a truck driver, he could probably pitch his show to like Bloomberg TV or something. No shit on that. Like that shit is quality. What are we talking? What's Billions? Winky. Dude, am I missing some of you guys out there? I don't know if I'm missing you guys out there. Maybe. Oh, it's a show. Okay. I don't watch a lot of TV or know a lot of shows. So let me scroll back over to to the flow algo. We got a lot of SPY calls coming in. We got a lot of XLE puts coming in. XLE puts, SPY calls. March 11th, 428C, $300,000. NVIDIA calls. Those came in at the bell this morning too. I think I posted those on Twitter handle. More NVIDIA calls. 300 grand on March 11th, 225C. More SPY calls are March 11th, 429C. 2 sets, $374,000. And then $376,000. Yeah, Paskey is sounding smug on drilling permits. So on the drilling permits and that kind of stuff, Paskey was kind of weird. I saw parts of that. Let's see, nominal and real terms. Yeah, okay. It's more complicated than what she got fucking, she didn't address the issue how it should be addressed. So they asked her trigger questions. She didn't answer properly. It's not the right questions and not the right answers to those questions. Well, in terms of the market and in terms of price and cost and that kind of shit. Oh, you got all the bag holders on energy are coming out of the woodwork right now, huh? So billions is good, huh? Yeah, what do you guys think about Yeah, I don't follow him on Twitter, but his show is great to watch. Like production wise, show is unreal. Yeah, I gotta change my screen size here too. NVDA. I need to get a better I need to recalibrate my screen. My screener here needs to be recalibrated too. I've got a new screener, so this screener is wrong. Let's change the okay, NVIDIA. Bam, look at how fast that that loaded up. That's super fucking fast. So let this NVIDIA load up a little bit more. Take a look at the still rising. Beautiful. Arrow still rising on NVIDIA. Got some resistance here. Real sellers are above at 435. Just slow right now. Low volume. Low volume currently. Low volume on NVIDIA. So sellers are way outnumbering. This is just a solid bear market rip. Yeah, this is short covering still to some extent. Probably has to do with the ECB, with the Euro, basically Europeans this morning. They were like, we're not ready to put the cocaine bowl away. The Euros were like, give us the cocaine. We have war, the threat of war. I need more cocaine. And so when you hear something like that, it makes you wonder what the Fed's going to say. It's like that. The question is the Fed going to be as hawkish? And, you know, there were some Europeans this morning that were like, get fucked. You have to rein it in. And they didn't. And so that was, I mean, that's used as some of the reason why we traded higher today. Yeah, I can, I've got, I think I can get short interest on any ticker that you want right now in Spot Gamma. So if you list the ticker that you want to see short interest on, let me know and I can usually look it up. I think it's on Spot Gamma. Yeah, it is. Almost 100%. So I'm trading here at 427. We retested those lows down below at 425 or so earlier. Got lots of SPY calls coming in, lots of Apple calls coming in. Mike, give me what your guess is in the chat. What you think is going to, in the chat, what you think is going to be at the end of the day is going to be. My thought at the end of the day is that we're going to trade, ultimately squeeze higher into the bell, and then a big short will come on the market. I could be wrong on that, but I think we're going to squeeze higher. 430, maybe 431, 432 would be kind of like, maybe, possibly. I'm in no position myself currently at the moment. There's some people out there that think we're going to trade down to 420. If you were one of those people, I have already told you guys out there that that you've got puts for today. 420p's. They're now 4 cents. If you think that we're trading down here, we're going to roll this market down, they're dirt cheap. They're 4 cents. Cost you nothing. You can buy yourself some 4 cent, 8 cent puts. Whatever you buy, you can just average into them. And if you think we're selling off into this bell, grab some 4 cents puts, or get some 425s. Those are only 40 cents. and what you do is we'll trade it down. We'll trade it down. I think we squeeze up into the bell at some point, though. That's what I think happens. A little bit of a rollover in the SPY currently, but not too concerned about it. It hasn't really sold off here at this point yet. We have this same area. We've got this VWAP down below here at 426, but the buy the dippers are hiding down here at 425 or so, 425.50. So I'd be looking for a break of 425.50 to take a short position here. We want to see that break lower. And if you break lower than 425.50, your actual price target then is probably 420. Yeah, price target of 420, but you want to break 425.50. Because right now it's too risky for my blood. I would think that we can snap back at any moment, and we have snapped back at every moment today. So I have no reason to suspect anything different at this point, unless we break some form of support. Yeah, it's weak. Paul saying he thinks that we dumped to 425, then pinned to 428. Yeah, you know what, Paul? That's pretty good. I like that take on what you think we're going to do. Look at NVIDIA once more. Yeah, NVIDIA is just kind of hanging out. See how slow this is moving? Super slow. I probably have to change some of this stuff here too. I've got some limits on what you can and can't see on buys and sells currently. But you can see there's more buys than sells. 6,000, 2091, 1,000 here, only 195, 49, 120, 129 here. So I'm bullish on NVIDIA right now, believe it or not. I like Paul's take that he just dropped. Where'd Paul just drop that? Yeah, I'm going to check out Billions too. Who, Patsky? Saki? I call her Patsky because that's what they call donuts here. Yeah, I think they're called Patskys in Detroit. I've never had one until I moved here. Oh, so Max saying that, hey, Cap, I'm in oil and gas. One problem we've had this past 2 years is securing drilling finance from banks. Yeah, of course. I mean, you guys know it's boom and bust, right? You guys know if you're in oil and gas, what happens. You know that the money flows in, right, from new drilling, and then it just dries up. It's gone. Just gone. MQ, I'll do MQ next. MQ. Unsubscribe. I probably have to do some work on my settings too, because I was fucking around with the settings today on Bookmap, so I'll look back at that again. All right, so Josh has a great question. We'll answer right now for you too. So the question becomes, why would we squeeze up if we gapped up today? That's a great question. You've got a lot of it is returning to the scene of the crime. A lot of it is that when shorts close, they want best price to re-enter again. A lot of it is you're squeezing the last bit of shorts currently. So most shorts are closed at this point, right? They've been closing their positions all day long since this morning. And right now you're doing max pain on shorts that still haven't closed. So what they'll do is they'll squeeze these shorts higher right into the bell, right, to a capitulation point. When they capitulate, they have to buy the market and hope that the market goes up. So you're turning bears, the last bears, into almost like bull zombies. They have to run it up a little bit, hold long, right, into the bell so it goes up another 30, 40 points. Then they can sell their longs and and rejoin a short position. And then you've got bears out there They're like, we're going to wait until these last bears, these other bears get squeezed, then we're going to go short. Great question. Let's see what else you guys got. So I got MQ working for you. Why didn't we retrace the gap up? Been waiting for it. Yeah, you know, so, hey, Hit Mikey, good to see you, brother. Yeah, Patsky, right? It's Polish. Yeah, these like sexy little donuts that they have here in Detroit. They like make them special times of the year. Banging. No, I don't think it always happens same day. You're talking about a 3-day trade, right? Like 3 green bars, something like that. That's another good question. I see a question about gap filling, right? There comes a question: are we going to fill that gap down there for that gap up? Fuck no. And there's reasons why you don't fill that gap too. So not that we can't, but because I think we're going to roll the fucking whole entire market over. But you don't always have to fill a gap in a place. This is something I want all of you to understand. If you go to a 1-year chart on the SPY, now I'm not saying this is why we're not going to fill the gap. I'm giving you a reason for why we don't fill gaps sometimes, why we don't come back and fill some gaps. If you look on a year chart, we spent, okay, ready? We spent from April 19th, 2021 until June 21st, 2021, lifting up to this point in the market. Okay? So though you have a gap at this moment here, right, you still have all of this support, like long time support. Typically, where you see gaps get filled is a place that we haven't spent a lot of time at. So an example would be 479, 480 was the high on SPY, right? If we traded higher, let's say to 500, right? And then we sold down. Let's say we sold down. We left a gap behind and selling down, and we gapped back up. You would more than likely return to refill that gap because it's the first time we've been there. So if we've spent like months and months and months and months in a certain time frame, in a certain price zone, and you leave a gap behind there, it's typically not so bad. That's going up and down. If you see gaps in areas that we've spent time in building support in the past, we tend not to always come back and fill those gaps in. Most of the gaps that we fill are in places that we have not spent a lot of time. So just to be clear on that. And because people are like, oh, we have to fill that gap, or we always fill that gap, or then you hear people on the other side of the argument say, no, we don't ever have to fill that gap. There is some standing behind that. If you've spent a lot of time in that area, if that area has become some support in the past, and especially like it was over time, you don't always come back and fill that gap. So there is a chance that we don't fill that gap, to be honest with you. There is a chance that we won't fill it. We might actually roll the market over over in this 430 area. I see us rolling the market over. Personally, I think we roll the market over again. I'm still bearish here. Overall picture is bearish. And if we come back to fill that gap, it wouldn't be because of we missed it here yesterday. Because we can not fill this gap, and we'll be fine not filling it. We'll be perfectly fine never filling this gap ever again. If we turned bullish, I wouldn't even look at this gap ever again because of where it's at. I think we trade lower. I think we roll from 430 and we actually hit 400 and lower. I'm still in the bear camp of we're going down to like, you guys don't even want to hear this stuff. Like I see 370s, I see 200s, like 260 I think I was looking at last night. I see low. So, you know, that gap won't mean a fucking thing then, will it? The fucking gap will be gone. Yeah, roll the market over. So I'll bring it up real quick. Give me a second here. Give me just a second here. I'll bring it up so you guys can... Oh, wait a minute. See what you guys we're talking about here. Good question. You're new here? Talk about it right now. Go back, revisit it right now again. Okay. So how do we roll this market over? I'm going to show you how you roll this market over, right? Show you guys. I know some of you guys know this like ad nauseum for some of you. Well, let's look at it. Right? Been rolling this market over since when? Way up here, right? Way up here. Get up there. We're at that top right there. Okay. So this is a trading area, right? When we trade out of these areas, we tend to come back to them over time, right? If we trade above, we tend to come back into where we want to be, right? This is a negative channel that we're in. We're trading down, right? When we trade out of these bounds, we tend to trade back into them. When we trade above, we trade above, right? We have no different news saying we're going up. We're at a resistance point currently. And what does it mean we roll the market over? So, well, it's worked so far since December 28th, January, no, it's not January, since January 4th. So the question becomes, how do we roll the market over? Well, you'd start rolling it. Damn it. Just like this. That's how you roll the market over, right there. So the question becomes just timing. Like, how do you time this market rolling over? Do you take shorts here? How much risk do you put on with this, right? Or do you take it higher? When you're looking on a grander scale right here, the question becomes, when does it roll over? Does it roll over right now into the close? Does it roll over in the after hours? In a low liquidity environment? Does it roll over? When exactly does it roll over? You see a battle right now between the bulls and the bears if we're going to take this over or not. Right? So this is where the money was, right? And the question is, do we ever fill this gap, right? So let's say you didn't see all this over here. Any gaps in here I'd expect to get filled. Anytime we've spent lots of time, see all this time we spent here? April 14th, all the way over to June 22nd, right? Then we revisited it again. We said, fuck no, we're not selling it. Revisited down here again. Fuck no, we're not selling it. Revisited again. Fuck no, we're not selling it. Revisited again. Fuck no, we're not selling it. Right? So a lot of time spent in this zone. Now, that's the bull case. And that's what I'm saying is, so if you're at a new all-time high, it's easy for these gaps to get filled. You have to spend time in an area, okay? Now, on the bear case, they're like, we got to fill this gap down here. In reality, I'm not even paying attention to filling a gap. I'm looking for rolling this market straight over. Like I'm looking for this to play out over here. I think it's lower than this. This isn't showing futures, which it should, or SPX. But I'm looking for that down there. I'm looking for this roll. And then I'm looking, in all honesty, I'm looking for this. Something like this. Maybe we get some consolidation. And a slip. Right? 404, right? So that's your bear case. Now, if you break below here, right? You're setting that up for rejection. And you'll actually get like 390. Something like that. Whoops, sorry. And then you would get something. You might break higher. You get something like this again, firm rejection. And there's your next step down. Now, do we do this for sure? No. At every leg you have to, every single one of these legs you have to trade, because that might not happen, right? We might actually break higher here. Actually break higher here and then come down and up, right? Make a nice shot up. So you trade every one of these moves. Doesn't matter if you're bullish or bearish, you just trade what's in front of you, right? We've just completed this down here. We've just completed this down here. This is the second retest. And so now we're trading higher now to see if we were meant to go higher, right? We've tested, I think this test was in, this second test is a higher low, which is good for the bulls. And so the question becomes, the market is going to directionally move higher and say, well, if we're not going down, we're going to then check above. And if we have reason to go higher, we'll go higher. If we get rejected here and they say, no, we're going down, right, they'll move us down. Now, if we can't get it done in cash market and we are going down, right, what they'll do is they'll make us move down in after hour or in futures. They won't do it in cash. Oftentimes, you'll see when they can't make these moves in regular cash market, they'll make those moves in futures, believe it or not. So have a look, see here. We'll see if we squeeze up and higher. If they pin it into this close so that futures pushes it up, maybe there's something we don't know. Maybe that the big banks have undone all those shorts and they're not going to reapply them. So that's how you get that move higher in futures market as well. Take a look here. We've got sellers here, right? Check these numbers out here. You got buyers, big buyers here. Yeah, kind of decent sellers, but still not huge selling going on. Still not a lot of selling going on. Still not a ton. I'm bullish still here. I'm still bullish. Economists are saying SPX 2500. Yeah, I see 2600. I see that. I see 2600. Shit. 383 ain't nothing. I can show you guys going back to the 1940s that every time we've had market crashes, we've retraced 50%, almost to the tick. 50 to 52%, almost to the tick from the high. I can show them to you in the 40s. I can show it to you in the 30s. I can show it to you. It's the 30s and 40s, like 1937. 1937, we had a recovery from the Great Depression, and it's a neat thing too. If you know what the really neat thing is, if you compare the recession of the 1930s to the market crash of COVID. The time frames are a little slightly different, but we crashed and then we recovered in the mid 30s, and then we hit a recession, 1937, I think, and we retraced 52% of that move, that move higher. The move higher wasn't as big as our move higher in the COVID recovery because of modern monetary theory, but we also we retraced 52% of the market from 1937 to 1941, I think. And then it was interesting, we traded higher during World War II. But we've had other moments too. 1970s, we had some moments like that. We've had some smaller and larger moves as well in the 80s, like 1986, 87. And then again, you know about the 2000s. You guys have heard that shit ad nauseum, right? 2015, 2018, that kind of stuff. What's going on? Do we have any chance the bottom being in for the year? Picked up some veil. All right, on. Let's look at MQ real quick. We've got more sellers than buyers here, right? You can see that. Squish it up a little bit. More sellers than buyers. Resistance here at $11. I'm going to assume that MQ's got a squeeze potential to 1250. It's the only thing that I could say on this one. Possibly this must be news driven, something that I don't know. It says down here we got more buyers than sellers, probably over the entire day. But currently we've got some seller weakness. Price target below is 861 for some support. Resistance above is 1250. Real sellers, though, are hiding up above here at $15. If I had to guess, there must be some news coming out on MQ, and then it's looking for a squeeze higher. This is definitely a squeeze candidate, how it's set up, the buyers and sellers, and where your real resistance is. And you've got some great buyers down below on MQ. Now, good question. Liam asked, is there a real chance that this is the bottom for the market for the year? No. Even if this is a localized bottom for the year, you would almost guess for sure that we're going to come back down here at some point by summertime and retest one more time, if not two. There's a whole litany of reasons between destruction done to the market at this point, to the recovery of that, to needing reasons to go up to all-time highs once again. So the point would be the most bullish I would be right now. The most bullish you could be right now is we attempt to trade up to, let's say, 460 or 480. We're going to go back down again, find a new low, and we're going to come back up again, find a new low sometime in fall, and then we'll have a holiday rally into December. And that's the bull case. Because the shit that you need to go right for the bull case is vast and extensive. You're talking about QT not being stopped. You're talking about no rates. You're talking about no wars. You're talking about all the fucking shortages going away. You're talking about all the inflation going away. You're talking about greedy car salesmen saying, nope, we're not doing this anymore. I'm talking about companies not laying people off. We've got full employment right now. You're talking about you're going to want to see layoffs. You're going to want to see growth. You're going to want to see free, cheap money, no rates on money. There's a bunch of shit that you need to see for this market to call this a bottom for the year. And I don't think you see every one of those pieces coming back into this market currently. And when we don't have all those pieces, every single time we don't trade like we did the last 2 years. The way we trade the last 2 years is an anomaly. Like it or not, it's an anomaly. That's what it is. So you'll see more. You're going to come back into some kind of a normal trading pattern at some point in this market, and it's not going to be like 2020 and 2021 unless something happens that we don't know. We get like a fourth wave of Corona, maybe. We get a bunch of these pieces, some new growth coming into a company. I saw articles this week. There's our price target above, baby. So I saw articles this week. I saw layoffs. I saw Zoom laying people off. I saw another company saying they were going to focus. And I mentioned this last week, and sure enough, this week I see a news article saying we're going to focus on our core products. And I'm like, there we go, right fucking there. They're already saying, you're already hearing motherfuckers out there saying, well, we're going to lay some people off. And you already hear people say, boom, there's a move. Boom. And then you're seeing people saying, you see people saying things like, well, we're going to focus on our core products. We're not going to be doing any expansion. No more new research, no more new products. We're going to focus on what we do really well. When you start hearing all that kind of shit, it shows that there's going to be some tightening at some point. It shows that there's not risk-free money for development out there currently. So you need a bunch of shit for this to say, hey, this is a bottom. And the key for you as a bull right now, if you think this is a bottom, is you buy this bottom, right? And you trade it to, you can't trade it to like, I'm going to hold it for 2 years. You're going to have to be like, hey, I'm going to hold this trade to 480 and take some profit off the table. I'm going to look for another buy-in, right? Last 2 years, what you could do is you could buy and walk away and not fucking care. You could sell puts all day long. They weren't going to fucking print. But you now have to actively manage. And this is what money managers do. This is what portfolio managers do in normal markets, right? They actively manage portfolios. Now, when you're like retail trader out there, like you Joe Bob off the street, and you're like, well, I'm going to take charge of my portfolio. It used to be easy to do that in the last couple of years. It's not going to be that easy any longer. You have to do your own, not due diligence in companies, but actual investment diligence, right? Learn how to invest so actively manage your own portfolio so that you know where the actual bottoms are. People say you can't time bottoms. You can. If you really, truly, well, you can, generally speaking, time some sort of a localized bottom. Not always, but enough. And you can actually protect your account as we trade higher in case it isn't the bottom as well. But you have to, instead of just learning about companies, I was thinking about this the other day, is a lot of investors, what they've been focused, especially new investors, they've been focused the past couple of years. Retail investors got really involved like 5-6 years ago. I remember, I think we had the pot, the rise of pot stocks and that kind of stuff. I think it was right when Robinhood came into being. I saw a lot of retail get involved, but even then it was focused not on market dynamics and not on actual investing fundamentals. It was all based on company fundamentals, like just skimming over the investment part and actively managing your account part. What I'd really like to see retail traders do is stop fucking looking at companies now. Like, you've done that for 2 fucking years. And all I hear is fucking this is what Eric Hagar says, nonstop fucking garbage bullshit about you pick the ticker. And in reality, I'd like to see retail traders shift from that indoctrination. It's a good indoctrination. It's a great indoctrination, but to shift then from how to actively manage your own portfolios, how to learn how to manage in your investments, how to look at markets for where you enter, where you exit, more than just, hey, fuck it, it's Tesla, it's going to be fucking 30 grand someday. You have to like, I don't know if I'm explaining this enough, but because that's what you had to do pre. I don't know, I'm getting old. It's like pre-2019, pre-2018, something like that. I mean, dude, you used to sit there and they'd have these fucking FOMC meetings. They'd have the fucking Fed would come out, and they would try to fuck you on both ends. If the market was bad, they would fuck you. If the market was good, they would fuck you. And they didn't give you any hints of it. And they would have these meetings quietly in a room, and you'd know some of it, but then they'd throw one big fuck you in there. They don't do that anymore currently. They said they wouldn't do that right now, but they used to intentionally. So SPY's moving up now into resistance, trading higher into that 428. Right, we're going to be looking for some kind of a rejection here. So I'm going to try to get you a better number here. Get a tighter number. So now trading at 429, right? Look for maybe a top at 429.57 and then 430.07. We are trading higher here. We aren't trading lower. Looks like big old daddy Jimmy James got it right. Looks like we're trading higher here into the bell, or at least we are right now. We might sell off at some point here. Getting a little bit of resistance above. But you see that little bump right here? Got the old CaptainJimJames shelf right here. Got the sellers hiding above here, just waiting to pour in. We don't always make it up to this area. See this area, 429.90-ish? We don't always make it up to firm resistance, but you'll see this little stepping stone. If we can break through this resistance into the bell here, you might see some ultimate squeeze. Might not, but you might see some kind of a huge squeeze into the bell. So we'll see as this unfolds. If you are long right now, this is probably a place to take some profit off the table. If you are super aggressive and you're like, hell no, Cap, I ain't taking shit off the table, and you're going to be looking for this bounce right at 428.26. If you don't get that bounce off 428.74, I said 70, oh, excuse me, it's 428.74. You don't catch this bounce here, or if we bounce down below to 427.58 and then make the move higher, that's possible as well, but take some money and run. Take some money and run. We've got big tech up 5% today. Does anybody know why? We looked at it earlier, right? We talked about why big tech was up 5% today, right? We already saw the death cross on NASDAQ. NASDAQ had capitulated deeper than SPY had. So now the question is, SPY, the whole market, is on the cusp of a death cross. And so the question becomes, now that you've got this recovery, you got this huge recovery in NASDAQ, right? You got this huge recovery in IWM. Question becomes, they're all kind of matched up right now, right? All the ducks are in a row. Do we sell the entire market out here or not? price. Yeah, that's why you saw NQ trade so much higher today, was because of they had already crossed their death cross earlier, and they already sold off deeper. But they are a component of the SPY, right? So they're just a component of the SPY, small part of the SPY. And you know what else has a death cross on it is the Dow Jones Industrial Average. So look at CCJ. Ooh, I like this one a lot. Ooh, yeah. Who brought up CCJ? Who said CCJ in here? Oh, yeah. Ion SE, baby. Ion SE. Look at that. Burr, baby, burr. Gorgeous support on $25. No sellers, no resistance. Should have a nice little ripper to 28. A little bit closer. Look at that move. Boom, 26.81. Sellers are like, oh shit, what's going on? More buyers than sellers. There's no resistance. There was some up here at 28, maybe a price there at 27.61, 27.95. Could possibly have a squeeze higher all the way to 30. This is risky here. I'm going to give you your best chances to squeeze to 28.04, and a target even higher at 29.88. Must be news driven. I'm not aware of what's going on with CCJ right now. Now, the weird fucking part about the death cross is that what the fucked up part about the death cross is, as you enter one, right, you'll see huge volatility swings, like 2-3% moves, right? And then you see like a 15-20% downward move, this massive fucking move down. And so even if we trade higher from here on a death cross, even if we trade higher, right, when we come into one, the volatility gets fucking crazy, like crazy moves. And so now we're at 430, right? So what's the question? Do we trade down? Hold on. Question becomes in these where we are, those death crosses. And then what's really neat about the death cross too is when they turn green and not red, they're usually freaking huge too. So if you go back into Tesla, last May, they were on a death cross. I don't know if you know that or not. And Tesla last summer was in a death cross. And I took the long trade on Tesla. And do you want to know why I took the long trade? I'll tell you guys if you want. Because they did I'll show just on my cursor, I'll show you. They had traded down like this. They had traded up like this. And they made a 3-legger, two corrective moves. And so they had completed their second part of their correction. And so the death cross that had shown up, I was like, nah, they ain't going any deeper now. And sure enough, they had completed their second corrective move. And that second corrective move was plenty. The SPY, if you guys want to look at the SPY to say, hey, has the SPY finished its second corrective move? You could count it as 1, 2, and 3 down to 410, right? So we traded higher, and the anticipation was we should trade higher from here, but we didn't. So maybe our correction is not over, is the point that bears are making, because you had 1, 2, 3, it didn't happen. We traded higher back on March 2nd, and we failed. Came back down here to retest, which we just did yesterday, and the question becomes: if we made this second corrective move in the SPY, and we failed, maybe we have to go one more leg down, if not more. Actually, not just one. I'm saying one, but you got the bulls stepping back in on the SPY, grabbing that dip down here like, hell no, Cap. We're on a shelf, bro. We ain't going nowhere. We're trading the fuck on up to 430. Take me home, Cap. Take me to 430, Cap. Take me home tonight, baby. And they're like, fuck you, ain't going nowhere. $25,000 buys here, 15,000 buys here, 24,000. We're at 50, 75,000, right? 40, 50 is kind of a wash to an extent over here. Kind of a wash right here. So we'll see what happens. Can't call it from this point, guaranteed. Cap semi to 430. I don't know. These numbers aren't showing 430 currently, so we want to see some real big balls. I want to see some giant green balls right here. Oh, yeah. Paul's saying chances we dump into close, bulls buy cheap calls, and get trapped on a gap down tomorrow. That's a good one, too. I like that one. Flag that up calls say they're a base uranium company. If Putin bans uranium export, it will be a good play. Yep. I honestly believe the death cross is like one of the worst trading indicators because it's almost always late. Something that simple worked well, we would all have an algo trading it. So that's a good question, Sport K. I agree with that until the death cross gets to until it gets that close. Once the PP starts touching like the 50s and the 200s, when they start getting really close like that, you almost not almost they almost always fail with where not they actually make a move down when they touch. And if you look back the past 20 years, whenever they touch the 50 and the 20, right, the market usually fails. If they don't touch and they're kind of far apart from each other, the market tends to recover. And that's like 90% of the time, at least the general market. No, I'm not basing this on a stock, but the general market, SP 500, when you're looking at the NDX, IWM, DJIA, when you look at the composite index, the New York Stock Exchange composite, any of those, if you look on a one-day chart over time, if we touch or get close, even really close, we tend to fail. They are very consistent. They're not consistent on stocks, but on indexes they are. They tend to be very good indicators and leading indicators as you get closer and closer. So you will know soon. You're going to know here soon which way we're moving. If we're moving up or if we're gonna have a massive sell-off. No, I love order flow. I like them all. I like so this is how we do it here. Or this is how I do it, okay? Yeah, I covered it. So we went through the whole entire thing with Death Cross. Like we spent like 15, 20 minutes on it at the start of the show. So So this is how I trade or invest. So I start my day. Well, I do all the DD and all the news and the market sentiment and the trader sentiment, blah, 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 all that shit, right? And then, but when I start my day, traditional candlestick charting. That's what I do. Start right there. Just chart it out. Like, what does a bear flag look like? What does this look like? What's the moving averages doing? All that kind of shit. Layer all that shit on. I don't put a lot of weight into it, but I put it there because people trade it. Second thing that I look at is I'm looking at the fucking Elliott wave theories guys out there because we trade that. There are fucking algos that trade that. There are fucking hedge funds that trade that shit. There's retail that trades that shit. All those areas are important to know. Do they match up to traditional candlestick charts, right? So you layer that in. And then I'm sitting there and I look at market profile and order and volume profile and market profile. Layer that in there. This is every single day. Literally every morning. Layer that in there, right? And then when I'm done with all that fucking shit, then I go over to Spot Gamma and I get all my gamma. I get all my volatility. Literally memorize that shit every single day. And then, and only then, right, I start to rechart. I rechart classic support resistance levels. I rechart what Spot Gamma is saying. And then we come and we look at the book map and we say, okay, so what am I looking for here? So what are we doing right now specifically? So we fucking already know coming into today, we got resistance at 430. We know it's here, whether it's showing itself or not. We're watching it. It's taken us all day long. We caught up here earlier at like 1240. We know that up here that the bear is going to be stepping in. We've got layers and layers of reasoning. So now I'm looking for, hey, are we going to start selling up here? Hey, we're going to start seeing the sell orders come in mass. I'm going to start seeing. And on top of all that shit, we've got flow algo here, or your own flow software, and we're like, okay, we're looking at order flow, and now we're looking for some kind of waterfall or buildup of calls or puts. So you start adding all that shit in there, then you can kind of get a fair fucking idea of which way this market's going. Then you're watching the news, you're watching Twitter, you're watching fucking Trade the News, the Squawk Box, or you're watching Walter Bloomberg, and you see, Walter Bloomberg drops an article like, we're all fucked, and then you're like, shit, right? Or you watch an article from Walter Bloomberg and it's like, hey, it's fucking party time. Fucking, I don't know, some fucking Fed bear came out and said the fucking economy is great. Then you're like, hey, well, we know we're at some huge resistance. We know they're dropping positive news, probably going higher here. Or, hey, they're dropping some seriously fucking fucked up news right now. We're probably going to go down from here. Does that make sense? Josh, LOL, death cross and FOMC. Yeah, we went through the whole death cross shit earlier today. Like, do they work? Do they not work? When they don't work? I think they suck as indicators on stocks. Fucking horrible. Fucking horrid. I usually take longs on death crosses, and I usually take shorts on golden crosses. So we'll see what happens here. We're trading up. We traded up, bounced off 429.08. You can see we've got some not weakness, but we've got resistance right here. If you wanted to take a short here or start to get bearish at this point, you want a recommendation. So 429, right? You can open something up for you here, and we'll take a look at how to get into being short here and not get overly aggressive with it in case we go higher. Right? But you're like, hey, Cap, I want to protect a long here, or I want to take a long here, Cap, but I'm never at these supports and resistances. I never know what the fuck you're doing, Cap. I never understand where you're coming from. Never figure out what's going on with this shit. Okay, so I'm gonna look at. Hold on here. Now I'm gonna look here. I'm looking at a bigger chart, 1 month chart, right? Boom, boom. Let's say we go higher. Bam. I'm going to expect some resistance up here around 435. Maybe even, let's say we trade all the way up to 440. We trade all the way up to 440. Yeah, so I'm going to take some 318s. Ready? I'm going to take some 318s, maybe throw an extra week on them. So I got a month out. I get SPY. Just right now. Like, ready? Make this really easy for you. March 18th, right? March 18th. We know that everybody's fucking loaded to the tits on the 18th, so we'll go with March 25th. I'm going to go with March 25th. I'm going to go with debit put spread. I'll make it simple, too. We're never going to do debit credit spreads. We're not going to talk about individual tickers. Hey, buddy. And I'm going to look for... Hey, little handsome boy. How are you doing? You're a good boy. All right. And so right now, if I was to buy March 25th, right, I'm not even going to leg into this shit yet. I'm not going to get a super aggressive bearish, just not even legging into it. 429, 428p, SPY put spreads, just basic. Not even put back spreads, not ratio spreads. Just 429, 428, easy to execute. They cost $42, and their max payout is $58. The probability of them paying is 49%. So it has a high rate of probability of paying, because even if we trade to 440, there's a good fucking chance we're going to trade back down and retest 430 or 428. Let me go even higher, because maybe we're like, ooh, yeah, they're probably not breaking 430. Maybe we'll retest Cap, but not that bad. Okay, so I'm going to get you a better play, kick-ass play, right? Because I can actually formulate these numbers really, really fucking fast in this program. So March 25th, 434, 433p. Fucking a put spread, right? All you need to do is hit 434, 433 at some point, or be at it or below it by March 25th, or retest 430. If you retest 430, you're going to print too without even getting into expiration. You're not going to print 100%, but you're going to print like 30, 50%, something like that. So nice, beautiful spread, right? That one has a 56% chance of probability of happening, and it costs $49 for a profit of $51. Here's an even safer one. We'll go even safer with a decent payout. If you take a 438, 437p expiring on March 25th, right? 438, 437p, it costs you $58 and pays $42. I know half you motherfuckers out there, not half of you, but I know like a bunch of you assholes rarely print 80% on a trade. So that's 438, 437. Prints almost 80%, right? 90%. 63% probability chance of that one printing at some point. Might not print the entire time, but if we go up to and hit 440 and start trading lower, that shit's going to print at some point. Right, so there's another one for you. You could you could just hit a 440 down to 437, 440 down to 430, and it would probably print at some point between now and end of March. More than likely. More than likely, you're not getting over 440 by end of March. Or you are, but you're probably going to swing high and swing low at some point. I doubt that you see, like, us hit 440 and then go straight to 460, like a straight fucking shot. I think you come back down and retest lower levels at some point. Now, let's say we don't. Let's say you're like, Cap, I fucking diamond hinted that shit all the way into March 25th, and it never fucking printed 25 to 50%. I got fucked, Cap. Well, that's because you didn't trade both sides. So you're not a bull or a bear. You're a fucking trader, and you're a fucking investor. If you're going to be a fucking investor and a fucking trader, either, doesn't matter. What do? You put this put spread on, and you're going to trade this market long aggressively until it rolls over. If it rolls over, right, you already know that your put spreads are going to print the losses that you had in your calls. You made the wrong call. Then you leg in to some aggressive downside puts, right? Weeklies, dailies, short the market, whatever you want to do. Does that make sense? You guys understand? Because it don't fucking matter with the spread. That fucking shit can go to fucking 800 and it's coming back. It's always fucking coming back. And the best part about a spread is it doesn't completely fucking destroy your positions. Any kind of spread. I don't give a fuck. You got to learn the rules for which spreads to take, why you take them and why you don't. But at different times of the market. But you guys want to know how to not blow up your fucking accounts? Fucking spreads, bruh. Selling them, buying them, cutting the legs off them depending on where we go. That's a whole bunch of more complicated shit. But if you're a new trader or if you're an investor and you've never traded both sides of the taken both sides of the trade, instead of, I love buying the underlying. I love buying the SPY and selling puts and calls on the SPY. But for me in this market right now, I can't do that for my own convictions. But if you are trading this market or even just buying stock, you should be trading both sides always. Always be trading both sides. Not always. There are more risky times and less risky times to be trading it. But like right now, we're at resistance. So if we're at resistance, so this morning or in the close yesterday, I didn't have any. I'd closed out all my put positions the prior day. Not the prior day, but on yesterday, I'd closed my short positions, and I'd start taking longs into the close yesterday. I fucked up my timing on it. But I knew once I was into the close that there was no reason for me to take more shorts on. I was like, I have to now leg into longs and dollar cost averaging. But where we are right here, it's probably a pretty fucking safe bet that we're going to come back and test. And you can buy them in the money. They don't need to be fucking, spreads are dope. Like, you just put them in the money. Shit, you could just do a ratio spread. Ratio spreads are like two outside. I think it's two outside the money two outside the money puts, and then one inside the money put that you're buying or something like that. No, you're buying. You're selling an in the money put, and you're, I think, buying two outside the money puts. I got that right. Then you cut one side. You cut one side off. We keep going up. The selling the put. No, that's not. No, you keep them all, and the put that you sold ends up printing what you paid for the puts that you bought, the shitty outside the money puts. You guys should learn those. I keep harping on those for you fucking bulls out there. Keep fucking harping on how to protect your long positions for fucking free, basically. Basically free. If you don't know how to do it, stop watching my fucking podcast or my live stream and get your ass onto YouTube and look up ratio spreads, look up, I don't know, put back spreads. Just look up put back, like BACK, put back spread, and learn everything you can about them. Especially in this volatility. They fucking print like crazy. Fucking print badass. Yeah, it's sell one and buy two. It's sell one in the money. So you sell one in the money and then you buy two outside the money. And if the market goes up, that sold fucking put prints. Fucking thing prints. And if the market fucking burns, your ass is covered. Yeah, I gotta do some videos. I want to make a videos for you guys on spreads. But I'm always at like this, I've made a bunch of them, I haven't released them. My problem with making those videos is I have to do a huge, like, not financial advice, because there's like basic rules that you can follow and pretty much get away with trading spreads. But there's so many fucking pitfalls, little ones that you don't know about, that it's like you have to go out there and watch somebody else that's going to spend like 6 hours teaching you that shit. Options Industry Council does a really good job of in-depth explanations. Because there are mechanics that you have to know. There's timing that you have to know. When to open them, when to close them, when to sell them, when to buy them, when to cut shit off. Dividends, shit that doesn't close to cash. All kinds of other stupid shit. And that shit can get people in trouble. People get YouTubers have gotten into trouble with followers because they're like, hey, you didn't tell me this could happen. It's the only reason I haven't released any of those videos is because I don't want someone coming back and being like, well, you didn't tell me this could happen. Like, I wanted every fucking last disclaimer cap, and you should have been the one to tell me. Because there are people out that have done those videos, and they've gotten burned on some real arcane shit. Like, there's arcane shit out there, like, some of you guys might even know some of this stuff. So, the fucking banks and the fucking market makers, if you don't close your spreads on expiration day, they'll fucking pull hanky pankies between 4 and 6 p.m. They don't have to technically. The market's closed at 4:15 on, especially in SPY, but they don't fucking close. They don't close options at 4 o'clock. They have like these weird fucking closing hours. I think it's like 6 o'clock or something like that that you can push trades through in the market. Like there's expirations that are not when you think that they are. You think, oh, 4 o'clock, I'm fucking all set. We're way in the money. And that shit printed, and I don't have to worry about them having executed at 4 o'clock. In reality, they've got fucking orders coming through until like 6 p.m. they haven't accounted for, and they actually makes a real price in the stock price, and then they'll come back and fuck you over the weekend. By Monday morning, your fucking account is blown the fuck up. So I mean, I'm gonna post that shit, but I have to do this like big disclaimer where I'm like, hey, look, this is not the rules. These are just the rules that I use so that I don't get fucked. But you should be incorporating, especially at a place like where we are right now. Where we are right now in this market, right where we are right now, is a time to start taking some risk off, take some profit. You can still take longs, but to also start to hedge along here. If you're a bear, what you're doing is what? You're going to start to take some less risky bearish positions and put more risk on if the market starts to roll over. If you're bearish here and you're like, okay, we're starting to roll it over. We don't roll it over, right? You check this spread, right? Let this put spread, and we start actually going up. You can be like, oh fuck, thank God I only took that put spread. Hopefully it prints someday down the road. In the meanwhile, we're gapping up overnight, we're trading higher, and we got all this crazy good news coming out. I'm going to get long in the market, right? And start making some money getting long, and hope that we revisit that previous mark, that 430 zone in the coming month. I'm going to leave those puts spreads open, right, as a market hedge as I take long now. And that same thing works in the inverse too. So as we were trading into the close yesterday, if you were a bear, you either closed for profit, right? This is the same thing. You closed at profit at the bell yesterday, and If you didn't close the profit on the bell, what's your course of action? You would have put on some call spreads. You would have been like, well, if we gap down today, we're probably coming back to the scene of the crime. If we gap down the overnight, we're probably coming back to the scene of the crime. You'd probably buy some call spreads in the money and they'll print. Not today, maybe in 2-3 days. And if we reverse in the overnight and I get fucked, right? Then my short position is fucked or my long put position is fucked. So at certain market zones in the market, both bears and bulls, you should be putting risk on and taking risk off and hedging appropriately at those times. And yesterday at the close was a perfect example of a bear should either be closing. As a matter of fact, I closed early yesterday. I ended up closing in the morning. It was like 10 o'clock or something. I should have held that shit all day long. But I'd already been in them for a few days. So for me, I took what I wanted. I was looking for the turn, and I thought the turn was earlier than it was. So I had to double down, triple down, whatever. So when we get into these areas here, you have to be able to manage your positions. You have to be able to hedge risk. And if you're a bull right now, start fucking hedging. If you're a bear right now, start laying it on a little bit. You know, a little taste of turning this market down to like 400. You know what I'm saying? If you're a fucking bear out there, you're getting all itchy. Your bear getting all sweaty. All your big chest hair is starting to grow out. Fucking go around, tell the wife, like, I gotta lock me in the basement. You gotta chain me to the wall. Turn off the internet. I'm gonna place my puts. I'm gonna go hide in my bunker. I've got my two-way radio to the kitchen. I just want you to call me in a week and get me out of the cage, okay? I'm gonna place my bets and I'm gonna fucking lock myself down in the dungeon. That's what bears are doing right now. That's what bears are doing. Bears like, I'm gonna place my bets. I'm gonna go lock myself in the bunker, and I know that even if we go to fucking 440, we're coming back. And then you get fucking bulls out there right now, and they didn't fucking take any of this trade, and they're like, you know we're going up, right? And I'm like, fuck you, we're going up. What motherfucking move was yesterday? And it was off the fucking bell today. Fucking that move is done. Took the money and ran. You go fucking FOMO it yourself. I'll meet you over on 4:30 after over 4:30, and I'll take it up with you the next lap. No, it's the cost of the trade, Winky. It's the cost of the trade, man. One side costs more than the other. It's the cost of the. It's the same concept. It's the same concept as the putback spread. And so when you're buying the two outside the money puts, they're so fucking dirt cheap. They're so fucking dirt cheap. You're making the difference. How do I explain that better for you? So like if you're selling a put, they're expensive, but you're buying the two puts and they're dirt cheap. So it winds up flipping over and paying you more on the opposite end. Man bear pig, baby. Man bear pig. Man bear pig. Yeah, I got it sitting right in front of me. I've got the you guys should, whether you don't have to trade on this. Matter of fact, I'll be honest with you, I fucking hate this fucking software, this brokerage sucks at filling. It fucking sucks. Fucking sucks at filling, fucking blows. It's even worse than Robinhood. I usually execute these trades on Tasty. I get the best fills, and I can wait to get the fill that I want. That's a whole nother fucking topic. Like, you can build a spread on some platforms, like, as you go. You can, like, literally set, I want to pay this part of the leg of the spread, with whether you're buying or selling. There's some dope shit you can do on Tasty. You can, like, get all wrapped up in spreads and, like, even pay better prices. So you're picking out different legs of your spreads and then selling different legs of your spreads, managing your trade over time. But for quick and dirty, if you're looking for like a quick and dirty, I don't trade on this platform But I do have a brokerage account here just so I can get a quick and dirty idea. Sign up for options.ai. I've got a link down in the description. And the only reason I get that link in the description, or the only reason I use it, is because I'm looking for condors and butterflies. I'm looking to time. Sometimes you'll hear people say the best time to buy a condor or a butterfly or sell one is at the first 15 minutes of the bell, or at the end of the day and at the beginning of the day, because spreads tend to trade. There's a lot of action at the beginning and the end of the day. That's where most of the trading occurs. When you hear that statement, people say, "Oh, most trading occurs at open and close because of spreads." You got all these transaction spreads going on. So what I'll do is I'll open this up and I'll open up options.ai and I'll be like, I'm bearish, I'm bullish, or I'm neutral. I'll bring up a trade and I'll start manipulating that trade like 438 to 430, 450 to 440, for this, for that. And then of course where we are in the market currently impacts that trade as well. But I'm looking for the best price in that trade. And so just a quick and dirty, like, I'm not executing them here, but I'm like, okay, so what does this get me right now? And I'll watch it throughout the course of the day. There's not a lot of demand, usually in the middle of the day, but there's huge demand at the ending and the starts of the day. So open and close spreads. Actually, days of the week are important as well with spreads. This is a long conversation. This is some shit we can talk about another time, but whole another fucking thing is people are trying to open spreads on Mondays. I don't know if you know that, but people open spreads like a motherfucker on Mondays. So let's say I want to open a spread, right? I want to open a spread when everyone's trying to get rid of them. So if Friday is coming up, right? And I'm like, ooh, we got Friday coming up, right? And everybody's trying to get rid of their shit on a Friday. Then I'm trying to buy that shit for dirt cheap for expiration farther out, right? Let's say I'll buy a month out spread on a Friday, right? A month out spread on a Friday, and I'll have the expiration, or not the expiration 1 month away, right? And then I'll just hold it over the weekend, right? Or hold it until the next 2 or 3 Mondays when someone else wants to buy that shit on a Monday, because I'm buying it when nobody wants it. Has nothing to do with the price of the SPY. Just has to do with demand, right? And no demand for certain things, right? So timing. So I'm always looking at these things to see when there's demand for something, when there isn't demand, because you want to be selling your shit when there's high demand for it, and you want room for it to have demand. This is more complicated because like the price, like traders like whole numbers and you do spreads. Like I pulled out 437, 438, but in all honesty, like a 440, 438, we baller, because traders tend to like 445, 440, 435, 430. So one leg of your spread should be in a commonly traded whole number. So there's all so much shit I don't tell you guys. So anyways, another thing too would be like after big moves in the market, and you know there's going to be consolidation, especially up moves. Like you're like, oh, we got 2-3. Well, the market's bullish. Market's gone up for 3 days. Or market's only gone up for 2 days, and where I know we're consolidating here. I know we got no news coming out. We got all this shit. I can guarantee we're gonna go sideways for 3 or 4 fucking days. You go in there and you grab yourself a fucking condor or a butterfly, and you can get them fucking dirt cheap, and they just burn. They just like print money, and then you dump them after 2 or 3 days before the next leg of the next move. So timing is key. Oh, I guess those put spreads are printing, huh? Looks like those put spreads are printing. Shocker. Already fucking printing. Those put spreads I told you about are now up to $62. They now cost $62. So I guess those dollar-wide put spreads actually do print. They're up to $62. They cost $62 right now. Those all things being equal trade, Winky. Try to buy one right now. They're $62. They now cost $62. Now down to $60 because they are directional. So no, they do print. Don't buy those on options day. I just get it. Just get the fucking brokerage. Sign up for it. Don't put any money in it. Execute the trade somewhere else. But if you're looking for a quick and dirty, hey, what are my chances of this print? They even show you implied moves, which is another neat little thing on this brokerage is options.ai. But don't fucking trade them there. But one of the cool parts is they give the implied move for all your favorite tickers. So if you don't have spot gammon, you're like, what's the fucking implied move? They give it to you by the day, the week, the month. And you can look at what the implication is for where the market thinks we're going, which is kind of fucking neat. Just quick and dirty. So like here, I'll look up the SPY. It's like the implied move for one in the next month. The implied move from now into March 18th on the SPY is a low of 413 and a high of 441. And so you're like, ooh, that's the implied move. I already know that we could go down to 405. So there must be no interest in 405 Ps right now. I bet there isn't. I bet the market makers haven't priced those in yet. So you're like, what have they priced in these options? As a matter of fact, if we were to trade down to 413 right now, you wouldn't see 405s gain much value until we hit like 413. Then they would kick right in. So you're like, oh, what should I be buying for puts right now? Probably 410s. If you're going to buy puts, like 410s, because they're probably starting to be priced in right now. Like 410s are just on the cusp of being priced, or not. They're not priced in yet. But like a 410p for March 18th, it will have a premium kick on it. You ever hear about that premium kick? It's like, when does the premium kick in on an option? You're like, oh, I bought some calls that were way outside the money. They were 20 fucking or 200 points outside the money, and they really didn't start gaining value until we got within 100 points. And that's because of the implied move, the implied volatility, and then of course the interest in those options don't kick in until a certain point. So the IV moves or the implied moves here on options that AI is a really good way to quick and dirty look to see what to be buying as well. No, I just watched them go to $62. The market just flipped just now. The market just flipped. They were selling for 53, I think, and they went all the way up to $62. I just watched it happen right in front of me. Trust me. I've been trading this shit for years and years and years and years and years and years and years. It's my jam. It's how I don't blow my account up. It's how I can make bad fucking trades and still get away with it. Fuck yeah, I'm gonna be trading. I'm gonna be trading at the bell tomorrow. I'm gonna have to. The problem was last night I looked up last night. It was like 4 a.m. And I got the computer back yesterday at I think I left to pick it up at 4 or 5. I didn't get back until like 8 o'clock. And then I worked from 8 o'clock into 4 a.m. That's how much work I had to do. I had to pull a bunch of wires out, move a bunch of equipment, reset some stuff up. I had to plug in a bunch of stupid shit. Then I had to start working on the PC itself. There's all this stupid shit I got to do. And was doing. Then the camera needed a bunch of work done to it, and then so a bunch of that kind of stuff. So I was up till like 4 a.m. doing that shit last night. And I wasn't fucking drunk texting on fucking Twitter last night because I wasn't drunk. I was literally stone cold sober. There we go. Print those motherfucking put spreads. Print those put spreads. Print those put spreads, baby. Oh, shit. Oh, man. I didn't. I set my alarm for the open this morning because I had to sell some fucking calls that I had. So I fucking couldn't sleep in. So I fucking had to wake up for the open this morning. And then I had a cup of coffee, and I'm like, I gotta go and I was trying to run the stream. It took me another 2 hours to get the stream even able to run it in its form right now, which sucks because they got a bunch of stuff we're gonna drop for you guys this week. We have all the potential to do it now. We can put we're gonna put a flow stream inside the Discord so that you guys can just open a window with Discord and have fucking flow right there all day long. You just watch it live stream for you all day long. So boom, there you go. If you had taken all your calls off the table, let a couple runners run, and add some fucking put spreads in the money, right? You just paid for your fucking shitty fucking call of holding some of those fucking calls into the close. Boom. You didn't lose your ass being long into the bell. I do sell spreads. Look at that shit. And I think Paul called it out, right? I think Paul said we'll sell off into the bell the last 5-10 minutes, then bulls are going to buy the bell and they're going to get trapped tomorrow. Now that I fucking believe, because what they'll do tomorrow, the price of calls going into Friday are fucking stupid. Like we were looking at them earlier. Price of calls going into fucking Friday, they were like fucking $3 for like what? For like 3 strikes away or some stupid shit like that. Like, here, buy these calls for $3. I'm like, I ain't fucking buying those calls. $3 fucking dollars. You're fucking smoking crack. Matter of fact, the craziest part is they're still expensive. Like, you look at like 430s are now $2.87 for Friday. Get fucked on that. Those fuckers aren't printing. I'll tell you what, those fucking 430s now that we've sold off, they're gonna fucking trade this bitch sideways for. As if we're going up, they're gonna trade it sideways. Burn the fuck out of those 430s. And then they might be like 60 cents. And then you'll take them for Friday and flip them like 10 times for, 60 cents to $1.45. And then they'll burn off on Friday down to like 2 cents into the bell. Fucking worthless. Like fucking discarded trash. Yeah, so like credit spreads are dangerous as fuck. There's the bell. So you guys gotta be careful with credit spreads, okay? You get into some big ass trouble because those are directional spreads. The safety spreads are just debit spreads. Like a debit spread you can kick back. That shit eventually prints. They're fucking like dumbed down trades. They're simple. Credit spreads, you can get fucked up on those. You have to manage those. You have to be able to cut them. If you're directionally going in the wrong direction, you can get a margin call on them, basically. You can get a margin call on them. They'll fucking close your ass, and you'll get super fucked. Especially on tickers that don't close to cash. Like credit spreads can be dangerous. Credit spreads are fucking dangerous. I trade them, but I almost always want to make sure. So the way I use credit spreads is typically if I know we're going somewhere. If I'm like, I know we're going up here, but I don't want to be too risky with it, it's a credit spread. Like if I don't want to deal with the jagged up and down all day long, if you know we're going to grind higher, but the price of calls aren't going to change that much, credit spreads are your friend. If you know the direction, credit spreads are your friend. But if you're like, hey, I want to put some protection on, debit spreads, baby. Remember that, okay? That's key. Remember that. If you don't trade credit spreads and debit spreads, know that you have to have a pretty firm idea of direction. And that's the other thing, too, is the reason why people like spreads, the banks like spreads, I'll go over this in a video sometime, but you don't always need to know the exact price. You just need to know the direction that it's going to take or eventually will take. So if you're like, hey, we always go up, we always go down, it dumbs down a lot of trading by trading spreads, selling and buying. But yeah, I sell spreads all the fucking time. Absolutely. The only thing I don't do anymore is I don't do any ratio, I don't do any wheel shit anymore. I don't do any I don't do a lot of theta right now, or a lot of theta gang stuff like Neutral stuff I don't do a lot of because you have to highly manage them. A lot of theta gangs been getting fucked up. A lot of the wheel strategy guys gotten fucked up in this market. So it's just not the market for me to be doing it on. And there's certain tickers for certain strategies. Like you go down the hole of FinViz and you find tickers that don't ever move. Except for once in a great while. You can throw fucking condors on those bad boys. You can throw flies on those bad boys. People are like, I'm doing flies on SPY. I'm like, why? Why the fuck would you do that? I mean, not that I don't use Clorox, but it's not a good one. But there are some tickers out there that never fucking move. They fucking trade sideways for like 6 straight fucking months. Fucking, you just put a fucking condor or a fucking, or a fucking, put a condor on a ticker that moves sideways for like 3 months at a time. Fucking printing machine. No sweat. No sweat. And if you're rich, just buy the SPY. Buy the SPY and then you sell calls and puts. But right now I don't like the SPY right now. I'm afraid of the SPY. Okay, let's talk about that. Anything on YouTube you'd recommend to learn about options? Good question. So I'll send you down a rabbit hole. You're going to Google search the Options Industry Council. Step 1, search the Options Industry Council. This is a nonprofit that the Chicago Mercantile Exchange has set up for you to learn, not YouTubers, fucking the literal like stock market professionals. No one knows about this. Okay, some people do, but I used to push it a lot on Twitter because this is a nonprofit that they have the actual. This is the kind of shit that you go to your workshop, your bike shop, you go to your garage, you go to your basement, you fucking go plaster a wall, go for a hike, a walk, a bike. You download these videos in MP3 format for when you're taking walks, you're driving somewhere. You put them on a laptop when you're doing some work, in your kitchen, cooking dinner or something like that. Whatever it is you do, and you just play them in the background. It's like watching C-SPAN, and they got like fucking 30 hours of that shit, and you just play them over and over and over again. Now, if you don't understand them, I'm going to tell you, the more you listen to them, the more familiar you become with the concepts, the ideas, and the words. The second thing that you're going to do is you go onto YouTube and you start to look up how people trade spreads, right? There's a guy from Tasty Works with the glasses. He does a good job of explaining them. Now, with all that said, I forget his name, but he's from Tasty, and he explains how to trade them. But they're complex still. Someone that's never traded them and doesn't fully understand. You're like, what the fuck does this mean? I still don't feel confident buying this or selling this. So after you've done those 2 steps, right? You're like watching the short videos on YouTube, and you're watching the long videos in Options Industry Council. Your third step is I want you to download fucking options.ai. And we'll do a video on just options.ai. We'll do a video on it because I want you to visualize. Because it's when I first started learning, I was like, man, I have no fucking clue what they mean. I was like, I get it conceptually, I get it, but I still have no fucking idea what they're talking about. Right? So I'm like, what is this? Buy a call, sell a call? I have no fucking clue. What do you mean I need a margin account? Sometimes you don't, sometimes you do. Some brokers don't require margin accounts for I don't know why. For some spreads, and then some require. Like, you can't trade any spread on Tasty unless you have a margin account. So like I have a cash account and a margin account. I keep 2 separate accounts on Tasty Trade to place trades, and the margin account is for trading spreads, but you can get fucked. But anyways, the first place to learn how to actually execute them, believe it or not, I would execute them on Robinhood. I hate Robinhood, but Robinhood, you can open and close legs of spreads in Robinhood easily. Okay, so I would plot and plan on options.ai, believe it or not, and then I would execute on Robinhood. And then once you just get the feel for them, how they move, how they don't move, then you'll switch over to like a Tasty or your favorite broker that's a legit fucking broker. And then you can learn how to really maximize your gains. You don't need all those gains in the beginning. You just need to understand the mechanics of how they fucking work. Just the mechanics, like the hard, fast mechanics of spreads. And then you build from there. Then you graduate. You're like, fuck this, Cap, you're right. I'm getting out of fucking Robinhood because they get shitty fucking fills. I can't get anyone to fucking sell to, and I got to do it at these moments and blah, blah, blah. Then from there, you're going to have the basics down. Then you move over to Tasty Trade, some kind of broker like that, and you'll start to execute your trades there, and you'll have a firm grasp of what's going on. That's my best thing I can give you guys. Tasty's fucking dope, dude, when it comes to spreads. That's not true. That's not true. You can trade spreads on, I think you can trade spreads on like Robinhood. I think on Options AI you can too. I think a lot of these like fucking gamified fucking brokerages, they'll give you a cash count and let you trade them. I'm not positive on that, but I think they do. I don't think they give you, unless maybe you are signing up for a margin account, you just don't know it or something. I think Robinhood, just a cash count, you can execute those trades. Don't quote me on that, but I'm almost 100% sure you can. Almost 100% sure that they're doing that. They're allowing fucking traders to do that shit, which is fucked up. Don't get me wrong. That shit's fucked up. And there's a reason for that. And that's why you get a margin call on your fucking spread, you're getting butt fucked. Absolutely butt fucked. And there's some rules there. I'll put a video out for you guys because there's some hard and fast fucking rules. Like you don't want to be trading on fucking tickers with dividends. You don't want to be ever trading around time when they announce dividends. So like let's say like, oh, I'm gonna buy fucking Disney. I'm gonna buy some fucking Disney spreads, right? This is a prime example actually. Before we hang up here, right? The prime example. So if you're fucking buying, so Disney at one point, I think in 2020 or something, they said we're not doing dividends. I think it was Disney. One of these I think it was Disney. They were like, we're not doing dividends, and shit. The moment that you hear we're not doing dividends, and you know that they ain't doing any dividends for the next 3 fucking months, no matter what, you can go in there and play spreads all day long. Because if they announce a fucking dividend, they come busting out some fucking dividend bullshit, you're fucked. There's other things like you want to be settling the cash because you can get a margin call, right, at any fucking time. Any fucking time, right? You can get a margin call, but when you settle to cash, like SPY does, you tend not to get margin calls. You tend not to. And they tend to let them trade into or expire worthless options on the SPY, cash options. But you will see motherfuckers trying to own fucking Disney. You will see motherfuckers trying to own Home Depot and that kind of shit. You'll see some Ricky Ritardo out there, shouldn't be saying that shit. To see some fucking guy out there be like, I'm gonna fucking execute these motherfuckers right now, and you'll be like, you'll be getting straight fucked in the middle of a fucking trade, and you're like upside down, but you know it's gonna print down the road. That's what I'm talking about. You're like upside down, and you're like, well, it doesn't matter. I know it's gonna bounce right here, and I'm gonna make my money back. Specifically, that happens on fucking. I think it mostly happens on credit spreads, where you really get fucked on those trades. And then there's some other problems too, because sometimes they'll close you out on one leg of your trade, your broker will, and it'll show that you're like super fucking upside down on the trade. They'll leave the other leg open for you, and then like you'll over the weekend will come, and it's gonna show that you're like it's gonna show like you're like fucking you're in the hole for like $500,000. That happened to some kid, right? I think some kid closed the trade on Robinhood, or they closed it on him. They fucking margin called his ass. He was down like $300,000, but it was a complete wash because his other side of his trade was up like when I was like fucking $325,000. So on paper he looked like he was fucked. I think he killed himself. And then like Monday morning, the fucking trade, of course, washed, and he was up like 25-30 grand or something like that. He didn't know though, and so that's the point. Like, just start watching those videos over and over and over and over again. Start watching the ones from the guy from Tasty Trade. He's a blonde guy with a pair of sunglasses or bifocals on or something. And then I'll teach you how to trade them basic trades, and I'll do a short video with you guys on Options AI, and then you'll execute them somewhere else. They're easy to execute. Once you figure it out, they're easy to execute on another platform. But anyways, I usually stick to, well, I'll explain to you what I stick to. I have like rules for I got all kinds of fucking spread rules. And I'm sure some guys listening right now out there do too. Matter of fact, you know who does great, you know who trades great spreads? If any of you guys know him is, I don't know if he's listening in right now, but what's his fucking name? Tesla Jess. He's in this stream all the time. You know what I want you to look up? Go find Tesla fucking Jess on Twitter. Because I had a talk with him about spreads one time. That motherfucker knows how to trade some spreads. You want to know the ins and outs of fucking trading spreads? That guy has got it on lockdown. Is he in here right now? If he ain't in here right now, go find Tesla Jess out there on fucking Twitter. TESLA JESS. Go find his ass. Yeah, Robin Hood murdered that kid, right? Yeah, and that's the thing. Yeah, he actually won the trade, right? MQ's printing 35%, baby. Yeah, well, no, so that's a good point because here's the point. Here's the point that's being made is so let's talk about that kid. There's a couple things. So the dude from Tasty, right? Let me pull this down. I looked this up. Hold on a second. I want to show you guys something. So on hold on here. Hold on 1 second. I'll show you guys something real quick. All right. So I'm going to show you a couple things before I get off here. I'm so stoked I can do this shit with you now. Okay. This shows you how long I've been fucking trading, because I remember this shit. What I'm going to show you next. Let me find the guy. All right, right here. This guy right here. So I'm gonna bring you this guy right here. I'll show you this guy. So this guy's this is the In the Money channel, okay? I think he's from. I haven't followed him in years. I haven't followed him. The guy's been around for fucking ever. Not forever, but I think the guy's been around for at least 5 or 8 years, maybe 10 years. I could be wrong. But follow this guy right here. And what's neat is that kid that killed himself from Facebook, right? Not Facebook, from fucking Robinhood, the Robinhood trade. This guy right here got into some trouble. And he shouldn't have gotten in any trouble. It wasn't his fucking fault. It wasn't this guy's fault at all. But when retail traders started trading spreads, this was the go-to guy. Like, everybody was like, you got to go to this guy. This guy's going to teach you everything, right? This guy goes into depth in his videos on how to trade spreads. And they're very, very insightful. And they are huge, huge in-depth videos, right? But now this, I don't know if this is 2018 or... So we're going to look back here. Let me see here. Yeah, you're wasting money and exercising options. Like, this guy does some really, really cool stuff, right? Yeah, stock splits, right? There are all kinds of crazy shit, right? That can happen to you in spreads, bad things. But we're going to look back. So this guy, what happened with this guy was... I forget the ticker, but there was a ticker that wound up selling off into the close or something like that. There was a trade discrepancy between like 4 p.m. and 6 p.m. and everybody was in on this trade 3 years ago. No, he's probably gotten rid of these trade. No, hold on here. He probably deleted this fucking video. He did an apology video. You know what, too? This looks like... I think that... I think that he might have had a different channel with Tasty Trade prior to this. So maybe he has a new YouTube channel. Or maybe it was here. No, he had a fucking video way back in the day, right? This one right here you could read. Watch this one right here. Assignment risk is a good one. How to trade options on Robinhood for beginners is a good one. I watched that one. He had another channel. Here it is, right here. Here it is. It's Robinhood Trader. Robinhood Trader commits suicide, right? What actually happened? I think you watched this one right here. And this one right here. This important warning for options traders. Because I think that he got caught up in this. Like, he didn't tell somebody or he didn't tell his people, yeah, you've got this like 0.00002% chance of this happening, and people came after all the people talking about spreads on YouTube, and they're like, you can't be doing this shit without telling them all the risks. And he has 325,000 views. This is a trade that all retailers were in, and they got fucked. I think it was here. Oh, this one right here. This is one right here. Like after hours, what happened in after hours. Watch this one right here. The what the heck happens after market close. That's a good one. I've watched that one before at some point. Anyways, check this guy out. I like what he talks about when it comes to spreads. And he got caught up in this, and it wasn't his fault. Anyways, it wasn't his fault. You have to have your own due diligence, and you have to fucking figure out the complexities of spreads, because they are complex, and there are risks associated that you can't see coming no matter what happens. Anyways, I'm gonna let you guys go. Appreciate you guys all stopping in today. Yeah, project finance. Yeah, I like project finance too. I like project finance. I like project finance a lot. Yeah, no, I don't think he's a good trader either. But he talks about project. I love project finance, believe it or not. I think he had. I swore that he had a channel with Tasty at one point. I could be wrong on that, but I swear that he was doing videos for Tasty Trade way back in the day. I could be wrong. Don't quote me on that. I may be mixing him up with somebody else. Oh, the fucking Lambo? You like that? It's fucking disgusting, isn't it? It's fucking gross. You guys all have a great day. I'll catch up with you guys tomorrow. And I'm going to try to work on Discord tonight, too. I'll try to get the stream up and running in there with Flow Algo and see the steps behind setting it up every day. I'll have one of the interns launch that every single morning for you guys. So you guys will have a flow all day long every day. And I think it saves you like $140 a month or something like that. It's good to be back. Good to see you, Tom, as well. Good to see you too, Sport K, if you're still out there. A whole bunch of you guys came in here today that I haven't seen for a bit. So good to see you guys all. And make sure you sign up to Discord so that you can open up a small window in whatever trading platform you're using. You'll be able to have that flow in there all the time for yourself. And I'll catch up with you guys tomorrow. You guys all have a wonderful evening. Pinky, good to see you, brother. Josh, have a great night. Winky, have a great night. Hud, have a great night. My sons, have a great night. Otter Sprocket, good to see you, brother. Paul, take it easy, man. I hope all you guys out there, if you're still listening in right now, you guys all have a great night. I'll check in with you guys tomorrow. If you guys want to know what I think is going to happen, it's 4:20 already. If you guys want to think what I think is going to happen, I think we trade higher. I think we trade higher, and then we get some bad news, some bad economic news. Then we trade back down into flat. We trade sideways for more direction. Let me look at a chart real quick if you guys want to know before we leave. And then we trade higher in the overnight. Let me see. They could slightly sell futures too because we had a lot of calls come in. And well, I don't know. Let's say we close calls. I say we trade higher. Yeah, I think we have calls closed at the bell. So no more dealer hedging needed for calls, right? So they could kind of sell futures, but then you've got put buyers at the bell. So maybe flat, slightly higher. Trade down into the open tomorrow on weakness and volatility. And depending upon what that news is, we're going to trade higher then to, let's call it 432.96. Or we start to sell this market down to 426.13. And yeah, that's what we're going to do. One of those two moves tomorrow. I'll catch up with you guys tomorrow. Have a great night. And yeah, have a whiskey. Matter of fact, I have to go have a whiskey. I haven't had a whiskey in like 2 or 3. I haven't gotten drunk in a while. You guys all have a wonderful night.